Motilal Oswal Financial Services.
Okay, all right, thanks so much for that, Sharad. Then watch out for this stock and trade. It is up as much as 3% in the pre-open session, so just about a minute to go before that closes. Rahul Arora, Chief Executive Officer of Ashika in Institutional Equity, is joining us. Rahul, thanks so much for taking the time and good morning to you. A lot of chatter, a lot of buzz on the geopolitical front, and that seems to be having a bearing on risk assets this morning. But do you buy into that?
Morning, Alex. Thank you for having me on your show. I hate to sound like a broken record because I think the last conversations we've had over the last couple of years have been fairly cautious on the markets. And unfortunately, that hasn't changed immediately. I think, as we discussed in our last interactions, I think this will continue till the midterm elections in the US in November. Of course, we had the added pressure of what's happened with the most recent conflict involving Iran and the United States. And the lag effect of that in earnings will only start kicking in towards the back end of Q1. So I think you're in a situation where geopolitics will continue to dictate for the next 3 or 4 months. But I think as we enter calendar 2027, some sanity will return if indeed Trump does lose the House. And that will pretty much set him back to where he was in the first term. So I still think this is going to be a year for fixed income and debt, which is something I've been consistent of over the last couple of years. But that being said, Alex, I think the market will not test you for price corrections, according to me. I think the worst of price corrections is over. I think at best, you'll probably get a 10% fall in the Nifty in a worst case scenario. That is even if it gets there. But my sense is, as we discussed on your last show as well, I'm fairly constructive that the Nifty will be at 35,000 by next Diwali. I think that view has not changed. But again, like I said, I think that's more of a view and a momentum that will probably kick up in calendar 2027 as opposed to calendar year 2026.
Sorry, can you repeat the Nifty level that you're looking at? I missed that.
No, so I was saying I would not be surprised with a 10% correction from here, which could potentially take the Nifty down to 21, 22,000. But I think if you have a 15 to 18 month horizon, don't be surprised if the Nifty is at 35,000 in and around next Diwali. I think once the market gets to the back end of this year, Alex, and starts factoring in FY28 earnings. I mean, we're still at the start of FY27, and this year's earnings are going to be a write-off again. I'd be lucky to get, I don't even think we'll hit a teen earnings growth on Nifty. If we do by some luck, then that's great. But I think this is more a call for next year, which is why I said I think even for the balance 6 months of this year, I would probably look to allocate more towards fixed income, gold and silver maybe, and anything that is GSEC and government securities related.
Okay, Rahul, I want to come back to you on that 35,000 mark. We had, all eyebrows raised in the studio for next Diwali when you said 35,000. I'm going to come to you on that. But I just want to quickly address what you're seeing at the bottom of your screen. It's an Axios report saying that US-Iran has extended its ceasefire for another 60 days. This is breaking news coming in just before the markets open. So they would extend the ceasefire for 60 days is the report that is coming in. And what is part of it? There are quite a few conditions which are part of it. This includes Lebanon for one. It also includes the fact that Iran would have to dismantle its nuclear apparatus. That's one of the things which is saying. A senior US official said Trump agreed that one of the options for resolving the issue could be downblending Iran's highly enriched uranium inside the country under the supervision of UN inspectors. This is important because that's the problem, right? Trump wanted the nuclear dust, as he called it, out of Iran. They're saying you're not going to take anything from our country. So this whole thing about UN inspectors coming in could be a midway that they're finding. Any steps on Iran's nuclear program would only take place if a second deal is reached, an uncertain prospect given how difficult the far less technical negotiations over the MOU has been. The MOU also calls for the strait to be reopened immediately without tolls, with a return to pre-war shipping volumes within 30 days. In return, the US blockade would also be lifted. This is important from our perspective. So big news coming in at this point. Rahul, if you have a reversal of the situation or the reasons or the factors that have caused so much grief to Indian markets, so Brent, bond rates, the Strait of Hormuz being blocked, the impact over there, fuel prices going up, etc., etc. Will the relief that you're talking about not come earlier than next Diwali?
No, I don't think so, Tamanna, and I'll give you 2 or 3 reasons for that. So one is what you read out is no surprise to anyone because the biggest global event in the world is taking place in the United States right now in terms of the FIFA World Cup. And I don't think they want to be distracted with, estimated $9 billion of earnings that are likely to come in over the next 39 days. So this news flow doesn't surprise me. That being said, I think Tamanna, people don't.
One sec, Rahul. I have to ask you, why would they sign an MOU and extend the ceasefire because of FIFA? Even if the strife is going on, how does that make a difference? What's the connection there that you're drawing?
They just don't want to be distracted as a nation, right, Tamanna? I think you want your entire focus on security and other aspects when you're hosting such a big event. And I don't think you want to be distracted on international fronts when you've got such a big event happening domestically. I think it's just a mindshare thing, I think, and it can't be a coincidence that this is coming just a day after the FIFA kicks off. That's just my view.
Okay.
Reserve the right to be wrong, but I think that it kind of adds up. But to the point on earnings, I think, Tamanna, people don't know how much this is going to impact earnings. I think because we don't know how much inventory corporate India had. We don't know the second and third order, impact. So let's just take crude, right? If it's crude, it's not just crude. It's going to feed into freight, octroi, travel costs because petrol has gone up. We are in an era where I think most of the people on your channel would have come and said that they're expecting interest rates to go up by anywhere between 50 to 75 basis points over the next 12 months. So then you have a situation where interest costs are going to rise. So I don't think anyone has a handle on how this is going to play out. Add to that, I don't think we know what IT companies are going to guide at the end of Q1. We saw, for example, what happened with HCL Tech at the end of last quarter. It was down 10% after it revised its guidance down. So there are a lot of unknowns, and which is why I think there is no hurry to enter the market. I mean, see, you had a situation where a 7,000 Nifty went to 28,000 in less than 2.5 years. So if you have a 2-3 year pause after that to just correct anomalies, there's nothing wrong with that. I think, if you look at valuations even today, consumer companies are coming to you at 45 times 1 year forward. They're not going to report 10% earnings. While IT companies' valuations are definitely cheap, but look at durables and electricals players, they're still trading at between 40 to 50 times. Again, 12-13% kind of growth. The Nifty would have actually been at 28-30,000 already had this conflict not happened. And that's because credit growth had come back to 15-16%. And that was a huge positive. But now the problem is people are believing that, there will be NPA issues because so many parts of the economy will be affected. If banks get into a deposit rush in a rising interest rate environment, there'll be pressure on net interest margins, which could put downward pressure. So I think just piecing together the unknowns, I think it's probably a better call to take closer to Diwali on how the next year will pan out as opposed to this year. And don't forget, Tamanna, FIIs don't have any compelling reason to buy India right now because why is the FII selling happening? It's happening because the money is going into AI-related stocks. We don't have a play here. And which is why the Bank Nifty has suffered. So I think that's why my call is more, sort of uncertain for the next 3 to 4 months.
Agreed. So don't do anything next 3-4 months. Maybe try and bet after that or take a call after that. Rahul, stay on. We'll come back to you post-market open. Kush, we'll take in your top calls as well or other reviews on some of the active stocks post-market open because the markets are about to start. We'll have a splash of green on open. The question is, what extent? And is it durable for the rest of the day? 268 points. So, right, what we said, right? I mean, 0.5% was looking a bit fuzzy. This is more realistic, about 1.5% or thereabouts. Bank Nifty, 1.33%, not surprised. Broader markets looking extremely buoyant, 1.4% for the mid caps, maybe slightly more than that for the small cap index, 1.5% for the small cap index, 1711 to 123, and the number will keep on changing, of course. But good, sharp market breadth on open. A tick of green out there, markets are doing well. Let's get the heat map up on the screen, show you what is moving and what is not. Very little red, by the way, 4 stocks, and no surprise ONGC is in the red because oil prices have come off. Shriram Finance, the ultimate beta play for whenever the markets move up or down, up about 3%. Indigo, no surprise, they're up 3%. L&T, any Middle Eastern ceasefire related developments, L&T would definitely react, is reacting today. Some bit of consumerism in trend, Bajaj Finance, Eternal, Maruti, and then there is HDFC Bank and Adani Enterprises and Geofin. Well, you have to admit HDFC Bank's 2% uptick is really giving that support to the market. And then almost everything else, ICICI Bank is up about 1.5%, so that too is doing okay. Just the point contributors will show you how much HDFC Bank is really contributing to this morning's gain. Out of 280, 47 or 48 odd points by HDFC Bank alone, and then ICICI Bank and Reliance pull up the rest. Not too many losers. losers, which is actually great news. Good start. Let's hope this lasts.
Oh, fantastic Friday coming up after a while. But if you look at it, just about 1% up on the Nifty. So put that in perspective as well. Want to pull up the broader markets and see if that stream is continuing. And you saw the advanced decline ratio looking pretty positive. So definitely it is. 1.5% up on the Nifty, mid-cap 150. Advanced decline ratio skewed towards the buyers, 1998 versus 147. Over 1.5% on the small cap 250 as well. Let me pull out the sectoral heat map for you. And just take a look at what's happening there. Nifty reality, this has become sort of a weather vane for market mood. Drops sharply when the mood is bad, and it's not a very representative index, so it's interesting that this happens on and on. The Nifty defense also up about 2%. Auto stocks are doing well. Small cap right up there, a complete green screen. One of the worst performing is the Nifty CPSE and the IT sector index, which is also about 0.5% up right now. Let's go to individual stocks, and when everything is up, it gets a little tougher to pick up the clear winners, but I want to look at those impacted by oil, and Brent under 90 is great news for HPCL, BPCL, IOC. You're seeing all of those stocks between 2 and 3.5% up right now. Indigo, want to look at how Indigo is faring because of that relief which comes in. We'll also look at an ONGC and an Oil India when we look at some of those numbers. ONGC and Oil India expectedly down in the red. Interglobe Aviation is actually nearly 3% up. MTAR, is there a recovery in MTAR after all of their explanations? 8% up this morning on MTAR. GNG Electronics also in focus for various news pieces, but MTAR about 8.5–9% up after 11% downtick yesterday. Happiest Minds is in focus because of its new AI platform. I want to look at Walchand Nagar, HCC, NTPC. Their nuclear power duties have been eased. Those stocks up and about. HCC about 5% up. And just let's look at Sagility very quickly. They have an acquisition about $30 million. So that was also doing fairly well today, about 2.5% up. So fair bit of winners today.
Oh, absolutely. Just a pocket of losers. If I look at the 500, there's practically just about 20 or less stocks that are losing ground. And some of the top gainers stand out, right? Aavas Financiers, HFCL, by the way, be a little careful with this one because it's had a bit of a slide and it seems to be finding some takers at these levels, but up about 5%. It generally gets locked in upper or lower circuit, so don't get stuck in one direction or the other. Actually, one direction would be fantastic if you get stuck, right? But Motilal Oswal is up and about. It is 4.7% higher, initiation of coverage by UBS, so that is positive. You have a couple of others. Netweb Technology is doing well, 7.3% higher. You have IFCA that's up about 5.4% or thereabouts. RK Forging, and by the way, a few automotive ancillary companies doing particularly well. Something like a Bosch is buzzing. It's pretty hefty stock, and so if it's moving quite substantially, that's something to watch out for. 4% or thereabouts, 39,000 rupees a pop, so not so easy to trade. PCBL is up about 3.4% or thereabouts. Data Patterns bouncing from the lows yesterday, doing okay as well. But Kush, we didn't get the opportunity to ask you about individual stocks that you might have seen in the pre-open session. Anything that you're seeing in the first few ticks?
So, Alex, I think today's the day when you go out and book profits partially, if not fully, because the momentum's building up, right? And with the news of the ceasefire, however fickle the ceasefire itself may be, it's a positive sign. So you can, carry your positions over to Monday with this kind of a, gap up that you're seeing. Not a bad idea, like I said, to book partially, take some money off the table. Amongst those, the top candidates would be Aegis and Acums, the stocks that we've discussed in the past. KSH, by the way, has opened, very strong with about 1.5–2% kind of gains. So this is something that you can still consider. Even the likes of Manorama, right? I mean, it's starting to gain traction, but these are stocks that you can still consider. So Manorama, KSH, still positive. And in the big names, Axis that we discussed, not too close to its first or the second target. So still a trade on all three names.
Just before I go to Rahul, I have a question on HDFC Bank. After a while, we're seeing it make a big pop. Is it tradable? If you had positions, would you book profits here?
Not tradable for sure. If I were to take a pecking order in the private bank big names, it would be Axis and ICICI. HDFC is the third rung that you buy for, a positional trade.
Right.
You don't buy it right now for, momentum. So I honestly doubt if too many will have profits because of the kind of fall that it's already seen, and the pop's really not big from those levels. So I would hold on to HDFC Bank, perhaps accumulate.
Just a small point, because City Union, we were wondering whether there was corporate action. Indeed, there is. It's trading X date today. There was a bonus issue, right? So 1:3. Today is the X date, so it's trading X.
Very important, viewers. I hope you got the gist of that and the reason why the stock is doing what it is doing. Now, Rahul, good morning. And it was last 2 weeks were a flurry of investor conferences. You guys had your maiden institutional equities conference too. Key takeaways, Rahul. I mean, I heard you say in your answer to either Alex or Tamanna that FIs are not interested in coming at all. But what was the reaction to any kind of mentions around earnings that corporates would have given or indications that corporates would have given for Q1 and Q2? Is there going to be pain? Are investors already pricing that in? What's happening there?
So I think, Neeraj, the broad takeaway was that banks and NBFCs seem okay, but there could be incremental pressure on NPAs selectively as we go forward. Consumer discretionary seemed okay, but the rest of them were in pretty much wait and watch mode, I would say right now. I still think that corporates themselves don't have a complete handle of exactly how things are going to pan out, and I don't blame them because the situation is ever evolving. And as I was telling Tamanna a little earlier, because you had inventories that lasted you say 4, 6, 8 weeks into this quarter, but once you have to start sourcing that inventory at a higher cost, it's not easy to model that in right away. So I think, to be fair to them, I think the one thing that we sort of, was a general trend was they were watching the monsoons very closely, Neeraj. I think because after a very, very long time, the last 1 year or so, we saw rural demand kick up. When we used to speak to companies like V-Mart Retail, which has a lot of presence in UP and Bihar, things were starting to look good. And now we're sitting in Bombay and, we're entering the third week of June and there's no sign of monsoon. So I think from a consumer standpoint, that will have a second and third order impact if the monsoons don't turn out to be right. But I think the most positive takeaway from that conference, Neeraj, was that the defense companies were sounding very, very positive. I think if there was one sector where I can, sitting with you this Friday morning, say that there was one sector that convincingly said they'll probably grow at 15% CAGR over the next 2-3 years, that was the defense sector. So I'd say defense followed by consumer discretionary banks. The rest of them, I'd say by and large, were a little more circumspect. And to your point on earnings, I think, Neeraj, the market and the corporates, I don't think have adjusted to the earnings cycle yet, because I think the downgrades will start after Q1 once people have a reasonable estimation of how things are panning out, both on the manufacturing sector in India and what the IT companies are guiding with respect to the services sector and how things are evolving in the US. So which is why I said it's best to be a little circumspect right now, not too disadvantageous to have. I'd still say be 50-55%, maybe even 60% equities, Neeraj. I'm not saying go underweight equities, but I wouldn't say be more than 60% equities right now, because it will test you more for time rather than price. And that sometimes can be very frustrating, especially if you're a momentum trader or in for the quick buck.
Just a quick follow-up on that earnings picture, right? And of course, to your point, it's hard to tell what it would be, but I'm wondering if you look at the print, what would you be more comfortable with? Because the past few quarters, if we were talking about the earnings growth being good, it was primarily driven by EBITDA margin expansion and that kind of, layering the earnings. Would you be okay with a little bit of compression, but an improvement in top line?
So I think, Alex, in one line, you have summed up the entire corporate earnings in India in the last 2 years, because it has not been top line driven. It has been margin expansion driven. And, that's the point I was making to Neeraj, that if margins, let's say you were expecting a company to grow margins by 200 basis points and it grows by 100 basis points, and then you have the monsoon impact as well, which could have an impact on consumer, autos, cement, fertilizers, and so on and so forth. There is going to be a second and third order impact. Now, see, purely on valuations, Alex, I would buy banks and IT today. There is no question. I think if you look at IT companies, they're trading between 14 to 16 times with the kind of cash they have on their book, the free cash flow yield, the dividend yield. But the question is that valuation giving me more than a 7-8% growth? So there is a reason they are trading there. So I think, as I was telling Neeraj, if your time horizon is 2 years, you were discussing with one of your other panelists about HDFC Bank. Now, let's take HDFC Bank, 1.6, 1.7 times price to book. I mean, Neeraj Bhai and I have been anchoring since 2005. The question is, when was the last time HDFC Bank was at 1.6, 1.7. So valuations are screaming. This is a stock that used to trade at 4.5 times. And we've seen stocks like Group Finance trade at 7.5, 8 times, sometimes even 9 times, even BAF, Bajaj Finance. So I think if you have a 2-year horizon, banks could be a very good place to hide with some interim pressure. I would love to see IT companies reduce their cash balances, go out there and buy companies for AI. It is depressing their return on equity. Go out there, make a bold acquisition, something like what Coforge did. There is no reason to sit on such high cash balances when you can buy growth and have your stock re-rated. So I think if IT companies do that, that could land up being the dark horse. And trust me, because of the under ownership, if there is an IT company in India that takes that move, you'd be surprised how quickly they can move up 40, 50%. So I think banks, defense, consumer discretionary, IT companies, if they're able to show good deployment of capital, and maybe selectively pharmaceuticals, that would probably be the bend of my portfolio at this point.
Okay, thank you so much, Rahul, for joining in today. Always a pleasure to speak with you here on NDTV Profit. Let me go across and put the spotlight on some corporate news. Narayana Health is guiding for a strong FY27 growth backed by aggressive expansion and aggressive capex. The India business remains the core growth driver, while the UK unit is emerging as a key growth engine. Before speaking with the group CFO, Sandhya J, let's go across to Varsha to speak about what is happening with the company. Varsha.
Well, Narayana is a story, of course, for the capex that they are doing, the expansion that they're doing, and also the UK business is actually the next growth driver for the company. Talking about the capex and expansion, well, they have an aggressive expansion across Bangalore, Kolkata, Raipur, and other cities, and the large pipeline they've been targeting at around 7,600 plus beds over the next few years, which is scheduled from FY27 to FY29, which will be a mix of greenfield, brownfield, and lease expansion. India remains a largest contributor for them. Cayman Island, if you see, they've seen a strong growth in hospital and insurance revenue. And UK business is the new growth driver for the company, which has completed 2 quarters post-acquisition. So capex and UK business are 2 main highlights when it comes to Narayana.
Okay, I'm actually going to take that outlook to Ms. Sandhya, who's joining in now. Thank you so much for your time to us. Healthcare stocks as a cohort has been in focus for the market for some time for several reasons, including that they're safer business when everything is happening around the world and there's so much geopolitical chaos. But I want to get a sense from you, Ms. Sandhya, that is that really the case? What is the kind of outlook you've seen? What has this quarter and the previous one looked like for you?
Good morning. Thank you for having me here. If you see the story of Narayana, like your colleague was highlighting, it's in 3 parts. One is the India business. India business has been posting strong growth and margin expansion. And that's coming on the back of throughput optimization, better bed utilization, better value procedures, payer mix, etc. And all of it is organic. We have not added any capacity. There is a huge expansion plan, but most of it is greenfield or built to suit in nature, and it is coming over the next 2 to 3 years. And therefore, we would continue to grow the India business organically. As far as the Cayman business is concerned, it has seen growth both in the hospital segment as well as in the insurance segment in Cayman. And there is a substantial growth that has come through. Margins have got diluted in Cayman because of the insurance business. But if you just keep the UK business out and look at India plus Cayman together, I think we've held our margin stable last year to this year. UK has been a new acquisition for us. We integrated from November, and of course it comes at a very stable top line, stable cash flows. Margins are slightly diluted, and that's why the overall dilution has seen. From an outlook point of view, I think for the industry, if you look at India, I think a large part of India's growth story is coming for most companies from capacity. For us, we do believe that there is a lot of organic headwind to grow within the existing capacities as well. So I think we believe that there is definitely continued scope for organic growth in India. As far as the other markets are concerned, Cayman is quite stable. UK, I think a lot of our focus will be in terms of improving the margin profile of the business.
Just from the FY27 outlook, you talked about organic growth. as having a lot of scope. What is going to be your mix between greenfield and brownfield in this year going ahead? How are you looking at it pairing out?
So we have announced about 2,000 crores, 2,000 beds, 3,000 crore of capex, but none of it is coming up in FY27 for us, except one small hospital which is coming up, which is not going to have a material impact. So we are not having any inorganic revenue addition coming, at least from the projects that we have announced so far.
And if I look at specific capex in FY27, you're saying this 3,000 crores is gets deployed through FY27?
FY27, 28 and 29, yes.
Okay. Just one quick point I wanted to ask you is, are you seeing any impact on inbound medical tourism, especially from GCC countries, hampering you in this quarter specifically?
Medical tourism is not something that we focus on as an organization. So historically, we've always taken a view that whenever patients, of course, we still get a lot of patients coming in from Bangladesh and we deliver services to them, but then we have not focused on medical tourism. So we are neither impacted nor benefited by medical tourism.
Ma'am, good morning. This is Alex here. I just want to understand. So, when you're talking about 2,000 beds, this is primarily going to be added in 28 and 29. So, therefore, where will you end in 28 as per the blueprint that you've drawn out, and where will you end in 29?
So most of the capacities will go live back end of 28 and towards early parts of 29. Okay. So that is from a bed capacity point of view, we are adding almost 30% more than our current beds. Now, these are all large projects and therefore they're going to take time to scale up, and that impact coming on our top line and bottom line. Though what we are also believing is that bed is not the only factor by which we should measure the revenue. It is about throughput. So the way we've invested in tech and the way we've been able to process more throughput through the same capacity, if we can continue to replicate that model in our newer capacities, we do believe that we do have a chance to break even a little faster and be able to process higher volumes when we get there.
That is exactly the question, right, ma'am? Because a lot of hospitals currently undertaking significant capex. This is a need of the hour, of course, and nobody's questioning it. The only point is how quickly do you turn that around? So what is the kind of occupancy that you would need and the volumes that you would need and the mix perhaps that you would need of operations in order to achieve that? And do you anticipate that it will happen in FY29 or will it be longer?
The current hope is that as our facilities go live, we will be able to process more throughput. There are two things here. One is that most of our capacities are going live in places where we have significant presence and brand recall, Bangalore, Kolkata, Raipur, etc. So therefore, we are believing that that benefit we will get. The second piece is that all our new facilities are going live with our tech-first AI-native models, which means that whatever we've achieved over the past several years, you know that from 2016, we haven't added a single bed in any of our hospitals, and we have significantly grown our revenue. So we will be able to deploy our tech-enabled model in these hospitals more effectively. The last piece is that we are approaching the entire care continuum, and we're not only looking at treating people when they come to us when they're sick. So, which means our clinics, our insurance, we have an entire integrated portfolio which we're building on. And by the time these units come up, we're believing that we will have a greater share of wallet with the customer, but more importantly, we'll be able to manage health outcomes than just treating sickness. So therefore, we would definitely be able to bring up these hospitals much faster.
So therefore, one of the questions that would be appropriate would be, what is the return on invested capital that you're anticipating, that you would be good with, that you would be okay with? And in the interim in FY27, in this current financial year, as you say that you're going to be driven by organic growth, what are the kind of occupancy levels that you anticipate? And you've managed a 40+% top line growth in FY26. Is that replicable in FY27?
So 40% is not replicable because there is an inorganic component of that coming in from the UK and also from the new hospital that we've added in Cayman and the insurance business that we've started. We're definitely looking for a strong organic growth performance across all the three businesses. As far as the ROC is concerned, if you see at our peak before our capacity addition started, we were ranging upwards of 25%. In some quarters we were even touching 30%. Hospital business is a cyclical business, so the assets that we establish in healthcare, you are able to realize the value of those assets over 25, 30, 50 years. So when you go through a capex cycle, the ROC suppresses, and then as the assets mature, the ROC picks up back again. So we were in that peak ROCE phase about 2 years back, and now we are going through that suppression phase because we are investing. Once the assets come live over a period of time, ROC will pick back up.
Okay, give us a sense of what segments are firing for you right now, especially your surgical mix. Can you give us some color on that?
Sure. So on the cardiology side, I think a lot of we of course are the leaders in the country as far as surgeries as well as pediatric work is concerned, and we continue to excel there. But we are also able to do a lot of robotic cardiac procedure. In fact, we've done the largest number of robotic cardiac surgeries in India over the past few quarters. And that piece is definitely going quite well. The next segment which has done very well for us is oncology. Now, on the oncology side, again, there is a lot of robotic work which is happening, but also across the entire spectrum. We have invested heavily in providing comprehensive cancer care across most of our centers. We have been recently, last month, we opened our radiation unit in our Ahmedabad hospital, and a couple of quarters back in our Shimoga hospital. And therefore, we've been able to create comprehensive points of care, and therefore oncology has also seen significant growth. Specifically in oncology, in the bone marrow transplant field also, we are the leaders in the country on the pediatric side, and we've been able to see significant growth overall in our BMT program as well. As far as our other specialties are concerned, the robotic program is playing a big role in terms of the growth of the other specialties, and across specialties we are seeing positive momentum.
So one of the outcomes of what you've just described is the average revenue per occupied bed, because the mix would also determine that, right? So what are the trends that you're anticipating in FY27?
So we do not measure our average revenue per occupied bed as a measure because we feel that it is misleading, given that it takes bed as a denominator, and a lot of the work which happens today happens on daycare basis. And the time of performing procedures have significantly reduced. So therefore, we look at average revenue per patient as a more accurate measure of performance. Our average revenue per patient has been growing over the past several quarters. It is coming both because of throughput and because of higher value procedures. I do think that the significant up that we have seen in the average revenue per patient over the past several years, I think there will be some level of moderation in that, because now we as a country, we need to start driving more volumes. For us also, there was a lot of transformation, tech and payer mix driven benefits that came on the average revenue per patient. So we do believe that it will stabilize at a meaningful level with the reasonable organic growth. We wouldn't see the kind of the upsides that we have seen in the past several years.
So, sorry, would you be able to put some numbers or ranges to that?
I don't think it's fair to put a number or a range to that, but what I can say is that we typically take price increases at the beginning of the year, and we take low single-digit price increases. Okay. So that flows into the realization to some extent, and we can add a little bit to that, maybe 3-4 basis points to that, 300-400 basis points to that, coming in from improved throughput and efficiency. So somewhere in that range, I think we can look at.
Ma'am, thank you so much for being so forthright with us, and pleasure speaking with you as always.
Thank you for giving me this opportunity.
All right, well, take a glance at the equity markets, by the way. They're holding out, but cooled off just a tad bit. The benchmark now trading with gains of about 1% or so. The action is in the broader markets as well, which are holding out. 1.3% gains for the mid-cap index, 1.5% for the small-cap index. Let's move on and talk about 12 years since Prime Minister Modi took office. Indian equities have in that time frame delivered strong returns across market capitalizations and sectors. Mid-caps and small-caps have led the rally, while defense stocks have emerged as standout performers. But what exactly are the key trends that have emerged over the last 12 years? Let's bring in Mahima to tell you about that. Mahima?
Right, so Alex, I'll start with how indices have performed over the last 12 years. I'll start with Nifty 50 first. In the last 12 years, the gains have been around 225%. For Bank Nifty, it's 263%. For the mid-cap, it's as high as 591%. And small-cap 250 has given returns of around 396%. Now, if you take a look at the sectoral performance over the last 12 years, you have metals topping that chart with gains of about 328%, followed by financial services at 323, auto as well as energy at 307. You have pharma, realty, IT, FMCG, all in that range of 200%. And then you have FMCG and PSU banks below the 200% mark, but still 183% for Nifty FMCG and PSU banks around 112%. Lastly, in terms of how sectorals that got listed after 26 May 2014 performed. There's defense, which has given the highest returns amongst all the sectors, 824% plus, and oil and gas, which is up by about 75% since that it was a part of the sectoral indices. So this is the overall view of how indices and sectors have done over the past 12 years, since of course Modi Sarkar happened.
Okay, so, we were having a conversation, and what has been really going viral is our conversation on the town hall earlier this week, which talked about how for small investors or retail investors, there is no real opportunity in markets. Well, the numbers belie it if you've had the patience and over the next 12 years. Well, we have a lot of coverage on this topic. We'll be speaking with Baba Kalyani of Bharat Forge also on what has changed in the last 12 years, more data points out there. And after the break, we have a conversation with VK Singh, Chief Operating Officer at Blue Jet Healthcare. Stay tuned for all that and more.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit.
Most watched. Okay, now back with India market open right here on NDTV. Profit about 1% higher, so not bad going for the markets per se. But healthcare as a space has done really, really well. And there are potential beneficiaries of the China plus one shift in global pharma following the US flag on WuXi. Now, lest this confuse you, let me firstly get in Varsha, my colleague, for a quick lowdown for the context before the CEO of Blue Jet, Mr. VK Singh, joins in to speak about his thoughts on the same. Varsha.
Well, thank you so much for that. The story over here is better times for Indian CDMO companies, as Pentagon has put WuXi AppTech on a list of Chinese military-linked companies, which means that if US companies continue to work with WuXi, they risk losing US government business, and hence companies will try to reduce the China exposure, and Indian companies are expected to benefit from this as global pharma looks for non-China alternatives. Now, where Blue Jet Healthcare stands over here, they have a strong relationships and track record. They focus on high value intermediates and APIs and develops advanced intermediates for patented and innovative drugs, and also is actively having a contrast media growth over the next few years. So overall, a benefit to Indian CDMO companies like Blue Jet Healthcare.
Okay, let's get in Mr. VK Singh, Chief Operating Officer of Blue Jet. And frankly, the China plus one conversation has been around for a while. The idea, Mr. Singh, is to get from you is whether this Pentagon and WuXi scenario that has happened in the last 72 hours, is it a material additional trigger for Indian CDMO companies or Indian pharma companies?
Hi Niraj. Good morning. Happy to be on your. Niraj, I think this is a complete structural reset, but I also feel that the euphoria is slightly misplaced. And let me tell you why I'm saying that. I'm saying that, if you just look at the etiology of the Biosecure Act, it came for the security and protection of omic data, where there was a lot of risk from Chinese companies, particularly which have a civil and military fusion. If you look at this etiology, the version 1.1 had named WuXi. But then in the version 2.0 of the Biosecure Act, the manner in which it was passed, there was a due process enshrined. The name was removed, but then there was a process for listing. Now, in the last 72 hours, as you very rightly said, there's been a Pentagon designation of WuXi on the 1260H list. But there are certain caveats. The first is that there's a wind down in the grandfathering clause, which in version 1.0 was 8 years. In this version will be 5 years plus whatever time you take to notify as a part of the FAR. So it'll be, let's say, effectively 6 or 7 years. So running contracts will not get impacted. Also, the second caveat is that this is only for federally funded projects, which means that if a company has got two programs running, one is federally funded, and they are doing something with WuXi or some Chinese company of concern, like they say, company of concern, then that program will get impacted. The program which is not benefiting from federal funding, from any government department, that program will not get impacted. Although this is on paper, because if a company does that, there'll be so much burden of proof and burden of compliance that it's going to be difficult. The other thing is that companies like WuXi are doing reshoring in a huge way. Today, I think, given the Delaware expansion, they're putting up 20% capacity or 30% capacity of their global capacity on US. And so is WuXi Biologics. I think they have 30-40% of the global capacity now getting reshored to US. So there are mitigation strategies, there are caveats, there are exclusions. And that is the reason that I'm saying that while it's a structural reset, the euphoria could be a bit misplaced.
Okay. So is the euphoria misplaced from the for lack of a better word, the timing or the time taken perspective? Because over the longer term, could this materially become a euphoric scenario? Is my question really? Because it may start off small, but eventually become big. Can that happen?
Niraj, and as you said at the outset, that is it panning out as a part of the overall China plus one strategy? Yes, I completely agree with that. Okay. For the last 2 years, or maybe a little more, the boardrooms have been having this conversation that how should we ourselves also, because the Indian pharma sector also has a huge dependence on China, and there is a huge geographic concentration. So we should de-risk our supply chain, make it more resilient, and at the same time, what should we be doing to benefit from this, the need for diversification that all companies have in the Western world. So this is clearly a conversation that we have been having, and it's not a phenomenon that's been triggered over the last 72 hours. This has been an ongoing debate for the last 2-3 years, and therefore, particularly with the Pentagon designation, I see, two things happening. One, that the new incubation business will start moving towards India. I don't see any other country which has the credentials that India has as far as pharma and biotech is concerned. And as a consequence of that, you will see more CDS getting signed, more customer audits on the ground, more client visits on the ground. And I think that's already visible. But the old contracts may continue. Nevertheless, even in those old contracts, we as a country may have the right of first refusal.
Mr. Singh, I appreciate the fact that you've been so candid talking about the euphoria and laying out the timelines that even if companies in the US had to move away from Chinese suppliers, it will take 6 to 7 years. My question is that the advantage seen by the street was the competitive edge that Indian companies would get. Without the help of this Pentagon missive, are we not as competitive? How do we really stand vis-a-vis Chinese suppliers in the US market, and how can we get more competitive?
See, as far as biotech and biologics are concerned, and as far as the new technology platforms are concerned, like ADCs, etc., I think China is far ahead. Today, if you look at the ecosystem in the biotech ecosystem in the US, at least 70% of companies have got some sort of engagement, small or big, that's not material, but some sort of engagement with WuXi. And that was the reason why in the Biosecure Act version 1.0, they were named. And there's a very clear civil-military fusion as far as WuXi is concerned. So they are entrenched in the market. But at the same time, they are WuXi Aptech itself. I'm not talking about the group. It's a $7-8 billion company. Even if 20% or 30% of the business gets struck down by this Pentagon designation, and that a part of that business migrates to India, given the fact that we are so small today in the global CDMO play, I think it's going to have a needle-moving impact as far as the Indian CDMO sector is concerned.
Let's talk about your company for a bit. What is FY27 looking like for you? What is this quarter looking like for you? Have you had any disruptions geopolitically? If you can just fill us in on what has been happening.
See, if we have to benefit from the China Plus One or Biosecure Act or whatever, or even for our own growth, the two key pivots are capacity and platform diversification as far as R&D is concerned. I think in the next 2 to 3 years, our capacity will double. And in the next 4 to 5 months, our R&D talent pool will also double, and the number of labs will also double. So at Blue Jet, I think we are preparing ourselves for good growth. And I think given the initiatives that we are taking and given the CapEx that we'll be doing over the next 3 to 4 years, I think we'll be in a very good place as far as capturing a piece of the opportunity is concerned.
Mr. Singh, just wondering, the promise is great. You maintain top line growths as well, but just for the benefit of people who won't be listening in to this afresh, don't know the history of Blue Jet as well, the operational metrics have come off a little bit, or I would say from your standards, quite a bit, right? In FY26 or FY25, or even maybe a couple of years ago, you were at 36% EBITDA margins versus what you've done in FY26. And I believe the primary culprit was Q3, but be that as it may. What happens even if you double capacity over the next 3 years? Do operational metrics get maintained at 30% off, or do they go lower, or do you have the possibility of scaling them higher?
See, initially, maybe there is some sort of a dip. I can't say that with certainty because in our PI segment, the volumes have started rolling out. But even if that happens, because we'll be doing a lot of capex, even if that happens, the moment the operating leverage starts kicking in, I think our numbers could be better than what we have historically posted.
Investor saying, well, we wish you all the best for that and more. Thank you so much for taking the time out. Look forward to talking to you again, of course.
Thank you. Thank you so much, Neeraj. Thank you.
All right, we've been talking about Prime Minister Modi becoming India's longest serving elected Prime Minister, presiding over a period marked by strong market returns, large-scale welfare delivery, financial inclusion, housing expansion, and healthcare access for millions across the country. My colleague Hiral caught up with Mr. Baba Kalyani, Chairman and Managing Director of Bharat Forge, for more insights into what went in the last 12 years and what have they been for India Inc. Here.
A veteran who's actually seen the changes as well. What do you make of this journey that India Inc. has had in the last 12 years?
Well, first of all, thank you very much for inviting me on this channel for this discussion. I'd like to congratulate the Honorable Prime Minister for a very successful completion of 12 years from the time he got elected in May 2014 till now. I have seen him right from 2014 for many years, going with him for many trips that he has been abroad. Japan, Germany, France, UK. But what strikes me the most is that right from 2014 till now, wherever he goes, whatever he says, it is always India first. Everything is put Bharat first in the context and then create the narrative that's required to make it happen, whether it's investments, whether it's technology, whether it's getting products, etc. I think as far as the manufacturing industry is concerned, he has been a godsend for all of us. The 2014 December plan of Make in India, which was architectured by him and involved almost every ministry in the government, and many of us who participated in that, created the roadmap for Make in India. I was part of the defense team that time for the whole Make in India program in 2014 December. But I think that was the major change in the trajectory of how manufacturing changed in India. He also generated a highly innovation-driven change in our country with reforms of Atmanirbhar Bharat, reforms of getting new products innovated in the country, bringing in new generation people, in making them unicorns by creating a ecosystem that helps them. So I think he has done a lot in this area, and especially if you look at Atmanirbhar Bharat in the defense sector, this whole thing happened around, it took 2-3 years. So first was the change in licensing procedure, which happened very quickly. Then when late Sri Mohan Parikarji was the defense minister, he brought in many changes under the Prime Minister's directive to make the changes in procurement, make products that are reserved for the Indian industrial sector. And now you are even seeing that complicated products like fifth generation aircrafts are being given to the private sector to work on. So this is the big change that has happened in the defense sector. Defense exports have gone from a few hundred crores in 2014 to almost something like 26,000 crores last year. So things are moving at a very fast pace, and it's thanks to the leadership and policy changes that the Honorable Prime Minister put in. I think they were very important for the country to bring the country into a new direction.
Absolutely.
And today, India has honestly become let's say, almost a preferred destination for global manufacturing to come in. I mean, we see so many of our companies that we work with, they are all bringing their production out of Europe or sometimes out of North America and bringing it to India. So I think it's a big change. We surely have a long way to go. We are not where China is today. So clearly, we have to aim high. Our ambitions have to be high.
Right.
But that's the direction the Prime Minister has set for 2047.
Okay, got it. All right, so you'll be able to watch that entire conversation and more conversations like that through the day. But we have to slip in a very quick break. On the other side, we're speaking with Hiran Savlani, who's the ED and CFO of Astral, and we'll be talking about their specialty chemicals play. Stay tuned for that.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the
Welcome back. We're continuing our conversations with corporates this morning, and this time we're talking about Astral. It's acquiring a 60% stake in DSS in an over 39 crore deal. The company aims to strengthen backward integration in specialty chemicals and improve cost efficiencies with the potential for future scale-up as well. We're going to be speaking with the ED and CFO of the company, Hiranand Savlani. But before we do go to Mr. Savlani, let's go to Puneet to just talk about the deal and what it means for the company. Puneet?
Well, thank you for that. Well, 4 key points, as you mentioned. Companies acquired a 60% partnership interest in differentiated as well as sustainable solutions, or DSS, for 39 odd crores. Point number 1 is that this has been done through its subsidiary, expecting the transaction closer by August of 2026 and by then as well. And this will bring a strategic fit to Astral's backward integration into key raw materials that they've highlighted in the past as well. Now, for DSS specifically, they are engaged into specialty chemicals as well as materials. They are used in electronics, aerospace, renewable energy, as well as defense, what the company has highlighted. So the question being, what could be one of the bigger spaces within the specialty chemical usage? And the second important question will be on revenue ramp up, because currently DSS has very low revenues, as well as what is the goal essentially over the next few years will be something to watch from this conversation, as well as the backward integration play, as well as the long-term margin benefit to watch out for Mr. Savlani.
You said it. All right. Thanks so much for setting that up for us. Mr. Savlani, let me come straight to you to give us a sense on what the thinking was and the way that the deal is structured as well. The benefits that will accrue to you, how quickly will that come through? And can you describe that for us in the context of FY27?
Yeah, so I can tell you that this company was at the initial stage of development. This company is having close to about 13 to 15 patents filed in their name. And I think many of their patents are already granted and many are under the pipeline. So when we meet them, we understood the product profile and we were very excited that these kind of profile, particularly in India, no company is having. This is the only company in the country which is 100% import substitute. None of the products are going to be manufactured in India, at least at this stage. Future, I don't know. But most of are import substitute. And the best part is that we are targeting close to about 500 crore revenue in the next 5 years. And out of that, almost 35 to 40% we are going to use for our backward integration. Because these products are going to be used in our main flagship product, that is the epoxy bondtite brand. In that, the hardener which we are using, that it is the base raw material for that. So I think this is a very perfectly fitted to our synergy, and many more products they have already developed, but commercially they have not put because they were not having the financial support. So now with this Astral staying, they are going to commercialize everything in the coming time. Right now the capacity which they are having close to about 5,200, which is going to take care of close to about 100 crore revenue, and which we are targeting that in the very first year itself, that is I'm talking about current year, FY27, we are targeting to be close to about 60-70 crore rupees revenue. And in that, almost 50 to 60% will be used by the Astral itself. So we are expecting too much from this company, and the way they have developed the product, and close to about 15 scientists are working in the organization. So this will not only support to our backward integration, but they are going to support in a very big way to our R&D department. Because in this kind of chemical product, R&D department is the biggest strength. So we are expecting that also the current existing setup of R&D of Astral is going to get a big boost with this acquisition.
Mr. Savlani, let me ask you a couple of follow-ups from that. And you're talking about 5,200 MT of capacity right now to take care of 100 crore revenue, of which 60 to 70% is going to be, or rather 60 to 70 crore is going to be yours, right? I'm just wondering about whether this company is going to have to add capacity, to what extent, and what is the kind of spend that you will have to put in place for that added capacity?
So I think we are targeting put another 50 crore rupees next year, because we will first work out the plan and everything. So we have identified that what will be the first mover. So 50 crore we are targeting to infuse in the next year. Out of that, close to about 30-35 crore will be capex, and around 15 crore kind of working capital. Because these all are the high-end specialty product, and that margin profile will be minimum 20 to 25% EBITDA. So maybe 2 years down the line, they may not require the working capital money also. And many of their products are so high, and I can tell you right now they are working for one order which they are shortly going to execute. They already received. That product is 65 euro per kg. So you can understand here that rather than capacity, the value addition is very high. So I think investment will not be there, but the realization will be very high and the margin profile will be very high.
I just want to ask, so therefore this is going to be significantly used for your backward integration and whatever emerges through R&D down the line as well. But specifically on FY27, the kind of expectation that you have, 100 crore or thereabouts, right? What is the kind of impact on consolidated margins?
So consolidated margin will not be going to be a big impact because in the very first year, 70-80 crore revenue is not a big thing. But from the next year onward, it is going to improve a lot. So I think once we will be working out exactly the number, we will be able to communicate to you. But I communicated to you that the minimum margin profile of this company will be 20 to 25% EBITDA. So you can work out that much benefit will be available to customer.
Mr. Savlani, sorry. So there are two backward integration pieces, right? The CPVC resin plant and this. You mentioned 20 to 25%. FY28, you are FY26, you are 16%. FY25, 16%. FY24, 16%. Are you saying in FY28 you could actually reach 22% EBITDA margins?
I'm not committing at this stage. Let us everything work out because our expectation, we communicated earlier also in our analyst meet also, we communicated that now Astral big bang focus will be on the backward integration. And as a part of that strategy, we are going into the CPVC backward integration and the parallelly now with this company, we are also going to go into the backward integration. But Neeraj, I can tell you this company is not restricted to only backward integration. Backward integration is going to contribute 35 to 40% of revenue. But the sizable revenue is going to come from the other businesses also, which is the product they are going to shortly launch because they have already finalized everything, products and the patents are already granted. But commercially, they have not launched. So now we are going to commercially launch. So that is going to quickly give us the revenue and all are the high-end margin products.
The extent of revenue, Mr. Savlani, that you're seeing. Good morning, Tamanna here.
So I told you that we are expecting in next 5 years minimum 500 crore kind of revenue and close to about 20 to 25% EBITDA.
In what timeline?
5 years.
Over the next 5 years. And do you think this accrues equally among those 5 years? Does it get front-ended? Can you give us an idea of what you see in the next year or so?
So like I told you, this year we are targeting close to about 70 crore kind of revenue. Next year will be close to about 150 crore kind of revenue. And like that, we will ramp up every year.
Okay. Thank you so much, Mr. Savlani, for speaking with us here at NDTV Profit.
Thank you. Thank you so much.
Okay, let's get to our big conversation of the morning with Pankaj Tipriwal, founder and CIO of Ikigai Asset Managers. Pankaj, thank you so much for speaking with us. And you know, we're speaking on a day when the mood is looking better, the rupee is looking stronger. It's actually wanted to start talking to you about a point that you made on your social media handles, where you talked about the potential that Indian export-facing companies have, which is not necessarily being seen. How do you look at the latest developments? Do you think we're perhaps at a position where we can say the worst is over for India?
So Tamanna, the tweet was, the thought was as follows. So if you look at the currency, Indian rupee is the second worst performing currency since March 25. And the worst performing currency is Turkish lira. Is rupee equivalent to lira? Answer is no. And hence you see that a lot of people are confused why the rupee is depreciating to such an extent. Let's first address the rupee issue and then I'll come how it benefits from a overall business perspective. On the rupee side, everybody think current account is the main culprit. Answer is partially yes, partially no. So last year we had an absolute current account deficit of $35 billion. And assuming crude stays at between $100 to $105, incrementally $60 billion gets added to current account. 35 plus 60, $95 billion on a $4.5 trillion economy. That's roughly 2% of the entire GDP. Is it very alarming? Answer is no, because in the past we have seen 4.5-5% of current account deficit. Yes, partially it explains the rupee depreciation and the nervousness of rupee. But the real culprit, if you ask us, is the capital account. 2 years back, our capital account was $90 billion, led by FIs and led by FDIs. Roll forward to 26, that number has virtually become zero. And there is a swing of $90 billion on capital account. That's the biggest culprit. And the third one is, if you look at the data, the importers were quite complacent between 88 to 90. And as the rupee crossed 90, there was a panic among importers to hedge themselves. And exporters withdrew themselves because the rupee was depreciating very fast. That created a shortage of dollars. And hence you saw rupee depreciation to the extent of 12% in the last few months. Our thought is that if the currency is weak, you can look the glass half empty, half full. But the sense we are getting speaking to a lot of businesses on ground is two things. One, yuan has appreciated by almost 22% against Indian rupee over the last 1 year, whereas rupee has depreciated by 10 to 12% against the dollar. There are two opportunities brewing in front of us. One is the export. So if you remove, logically we think only IT as the exporter, but there are many other sectors which benefit out of it. Textile apparels, capital goods and engineering. You look at precision, engineering parts. You look at the specialty chemicals part. A lot of these exporters will benefit from the tailwind, and many companies are saying that there is reverse inquiry coming from countries where Chinese were dominant, because India's cost competitiveness has increased substantially. One is the currency, and second, Chinese government has withdrawn the export rebates from 1st of April, ranging from 7 to 15%. And hence, Indian businesses who are leaders in export are seeing that traction starting to come in. And I'll be very surprised if we don't capitalize this opportunity which is presented to the exporters, because the cost competitiveness has increased substantially. And many markets are offering reverse opportunity to us, and reverse inquiries have started.
Pankaj, this hypothesis.
The second part is.
Sorry, I just want to come on. I just want to come on the. Yes. Yes, please.
Last 3 years, in many areas, Chinese imports were creating a havoc for Indian manufacturers. They were dumping products at a cost which is not the manufacturing cost of Indian manufacturers. And hence, with yuan appreciating, logistic cost doubling, and with export rebates being withdrawn, we are seeing the second opportunity, which is the import substitution. And many sectors which were a victim of Chinese aggressive dumping into India are seeing better times ahead. Yesterday, I was with a couple of chemical companies, and they are saying that the export quota by Chinese manufacturers has gone reduced because there's a dictate in China that first catered to domestic and then exports. Earlier, it was opposite. They were exporting, and whatever was remaining was to the domestic market. So I believe many sectors who are probably a proxy to import substitutions and were victims of very aggressive price competition from Chinese will also benefit. So that was the idea that, yes, currency is depreciated. There is an opportunity brewing both on export side as well as the import substitution side, and we should see that opportunity from a portfolio perspective.
Okay. No, so apologies for that interruption, Pankaj. The only point that I was trying to make is that hypothesis, does that change once the rupee strengthens, which it will, after what the RBI and the government have done recently to attract foreign investors into government securities? The expectation is rupee now strengthens to 92, 93 levels. Does that hypothesis then undergo a change as well?
Not really, because the 12% depreciation is very, very high.
Yeah.
Look at any of the global major currencies, they have appreciated against dollar, and here is rupee, which is the second worst performing currency after Turkish lira. We are not Turkey. Let me repeat it again. And the second point is that there will be some appreciation as we believe that rupee is oversold. But even after that, our cost competitiveness versus dollar and versus yuan has increased substantially. And I think Indian businesses should see that as the biggest opportunity for us. And on the import substitution side, let me be very clear. There is a very substantial arbitrage of about 20 to 25%, which is now sitting with Indian manufacturers, which was not the case 12 months back. So even if there is a 2-3% dilution, if currency appreciates to 90 or 92 levels, still there is a decent opportunity for us from that perspective.
Pankaj, I trust you to give the numbers in a great way. Just to simplify it for our viewers, where within this large export opportunity, the sectors may be small, but the number of businesses which are doing this is fairly large. Where is the best bang for the buck available? Is it textiles? Is it some odd plays? I mean, people are talking about a Pokarna and some others too. Is it auto ancillaries? Is it IT services? Where?
Across the board, Neeraj. So textile apparels, after a very long time, I am seeing positive commentary by companies and entrepreneurs. I have not seen this kind of a commentary for last many years. Look at the entire auto and export potential. Look at the complex engineering export potential. Europe is diversifying from all these manufacturing because of energy cost. And all the other countries, including India, which has a manufacturing base, are benefiting out of it. Look at metals and minings and the first and the second derivatives of metal and mining, whether it be explosive, whether it be grinding media, all which are exporting INR cost, realization in dollars, are benefiting out of it. Look at the entire specialty chemical space, both on the import substitution side as well as on the export side. I think both the sides we have the competitiveness starting to begin. I think these are many sectors which probably can offer opportunities from a portfolio perspective, but mind you, it won't be uniform for all companies in the sector. The key will be bottom-up stock picking. Key will be the cost structure of these manufacturers and how much moat they have in their products and how much competition Chinese were playing against each of them in different markets. So I think broadly speaking, these are the sector: capital goods, engineering, auto components, textiles, specialty chemicals. But in all these sectors, bottom-up approach will be needed. And we have already started seeing, Neeraj, market is too smart. Market is smarter than all of us. Since the start of the war, there is a Nifty manufacturing index. Look at the performance of the Nifty manufacturing index versus Nifty itself. There's a 12 to 13% outperformance since 28th of Feb, that manufacturing index, whereas market is saying that the low-cost competitive manufacturing of India probably will do far better than the broader market itself.
True.
So that index is outperforming the Nifty as we speak over the last 3 months.
Absolutely. Running out of time, Pankaj, but I want to squeeze in one question, which is that you've spoken about export-facing companies, but what about the domestic ones? Are there any that are attractive to you right now? Because I know you've done your ground checks.
So one thing which I'm very clear and where I have a difference, and I spoke to your channel last couple of weeks back, I think the street is behind the curve on revenue growth for corporate India. And across the board, when I'm meeting companies, there is a price hike of 5 to 15% somewhere between that. Add to that some volume growth. I am mindful of the fact that there will be some volume destruction, some demand destruction because of higher prices. But even if you add a nominal volume growth, you're talking about between 15 to 25%, depending on which industry, which company we are talking about, revenue growth estimates which will happen. Mind you, this quarter, which has gone by in March, the non-BFSI segment out of the top 500 companies, which is 404 companies, delivered 13% revenue growth, where you had just 20 days of the West Asia crisis fitting into that. Now the price hikes which have happened will be for the whole quarter and for the coming quarters. And hence my belief is when revenue growth comes in at 15 to 25%, a lot of your fixed cost gets absorbed and operating leverage starts to kick in. So brace yourself for the next few quarters in many sectors and industries, especially the home building product industry, whether it be tile, whether it be wood panel, whether it be faucets, you will see a revenue growth much higher than what the street is estimating, because 5 to 15% on an average has been the price increase. Add about 6-7% volume growth, you will see between 18 to 25% top line growth, which not the street is factoring into. And many consumer discretionary names will also surprise you on the revenue growth, is my sense. So bottom up basis, I think you have to be very on the top of the things, and revenue growth is where I think our estimates in the in-house versus the street estimates differ. And if that comes in, that could be a surprise factor for the street.
Certainly, Pankaj. And I'm sure that we'll speak post Q1 as well to get a better sense of how this pans out. Thanks so much for taking the time. Pleasure speaking with you as always.
Thank you so much. Thank you.
All right, we're completely out of time on this edition of India Market Open. From the three of us and the team that put the show together, thank you so much for watching. Stay tuned. Up next is Ask Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected in while we choose.
One of the big talking points in the recent past in the banking space has to do with the measures that have been taken by the Reserve Bank of India to support the Indian currency. And among them, there are two that stand out. One is the FCNRB deposits, and the other is external commercial borrowings by banks. Significant updates both. And to talk about how Punjab National Bank is going to be utilizing both of these facilities, I'm joined today by Ashok Chandra, who's the Managing Director and Chief Executive Officer of the bank. Mr. Chandra, thanks so much for taking the time. Let me start by asking about the FCNRB rate that you will be offering for the 3 to 5 tenor. Where have you pegged it at, and what is the kind of response that you anticipate?
Good morning, and thanks for inviting me to this Prime Show now. In fact, yesterday we had that ALCO meet, and we have fixed the rate for 3 to 4 years, 4 to 5 years, and 5 years. 3 to 4 years, we are offering 6%, 4 to 5 years, 6.05%, and 5 years, it is 6.10%. And I think we are expecting around 2.5 billion USD to be mobilized during this period.
$2.5 billion. So that's a pretty considerable sum of money, Mr. Chandra. And the reason why I wanted to ask about the response is because it has been suggested that, and you will remember very well what occurred in 2013. I can say that for certain, right? So that was the last time when we saw something like this occur. It has been suggested, Mr. Chandra, that the gap or the spread between global rates and Indian rates was significantly more at that point of time. It is not as attractive right now, and the currency may not move as sharply as it did back in 2013 when this announcement was made. So for both of those reasons, it has been suggested that maybe this time the demand may not be as robust. Are you hearing otherwise?
In fact, the feedback and the enthusiasm which we are seeing from our NRI clients, it is quite encouraging. And reason being, see, as on today also, US Treasury bond yield is around 4.25%. And our domestic rate, which we are offering, is also in the range of around 6.5 to 7%. Now, by increasing this rate in the range of around 6 to 6.10, I think there is a good spread that is available to NRI to park their fund in India now. Earlier the FCNR deposit rate was in this particular segment was in the range of around 3 to 3.5%. So there has been considerable increase in this interest rate. And definitely, I think we can see the good response in the coming days now.
Okay. Mr. Chandra, what is the anticipation of deposit growth at this juncture? Because here in the domestic market as well, there is an expectation that eventually in this year there will have to be a rate hike, which is only positive from the perspective of deposits. But public sector banks were not as badly affected by the slowdown in deposits as maybe certain other banks. So what is your outlook for deposit growth in FY27?
There are enough liquidity in the system. Liquidity-wise, absolutely there is no challenge. And all the banks, including our bank, is able to mobilize good deposit in this particular quarter also. We are seeing in the last 2 months more than 10 to 11% growth happening in the deposit front. So absolutely, I think challenge is not there. Challenge was only the cost of deposit, and that will get, I think, neutralized by the impact which the FCNR deposit is going to create in the coming days now.
That's very interesting.
So definitely, I think there are 2-3 advantages. One is the cost of deposit to all the banks will come down. And second important aspect will be that we will have the stable deposit for a longer period, because many of the deposits which we mobilize for under the retail and the bulk and the CD, I think these are all for maximum 2 years, 3 years. That is the maximum amount that comes under that segment. Here, 3 to 5 years bucket we are going to mobilize. So banks will be in a better position to manage their the ALM. And after all, the cost of deposit is also likely to come down.
Absolutely. So from that perspective, the utilization of this $2.5 billion that you're anticipating, how is that going to take place, Mr. Chandra? What is the implication on the lending side?
Lending, see, as of today also, our MSME is growing more than 21%. And the retail is growing at 17 to 18%. Agri sector is growing very fast now, 15 to 16%. So all these sectors are doing very well. And I am expecting that this momentum will continue for a longer period. This year already we have given the guidance in the very beginning of this financial year that around 13 to 14% growth will be there in the credit side. And I think definitely we will be able to manage this fund which is going to come from the FCNR route in a very, very effective way.
Okay. So I'll come back to the margin picture in just a bit. But in terms of the ECB, which was the other big announcement, Mr. Chandra, due to the RBI relaxation, what is the quantum that you anticipate you might be able to raise, or what are the plans there?
See, there are two things to understand in this. ECB already, the public sector undertakings, they are availing that. And in that, bank is not having any impact because of this utilization. Now, the latest circular which has come from RBI, they have allowed the offshore foreign currency bonds, that OFCB, to be utilized by the banking industry in India to be done now. And I think we are analyzing the guidelines, compliance requirements, and what are the positive, negative of this, the guidelines going to be there on our book. I think we are ready to take a call on that particular route. We will see that how much we are going to mop up through the FCNRB route, and then we will take a call, because for this OFCB, the duration is also longer, and we can take a call after 1 month's time how this FCNR, the things happens in our bank now.
Okay, but let me ask you from the perspective of your investor, potential investor, Mr. Chandra, off the top of your mind, as you've probably contemplated this, what are the potential advantages to having this offshore foreign currency bond?
I think we need to wait and see that how the FCNR deposit comes up. And if we are able to mobilize what we have targeted in a bigger way, I think we'll wait and see how the international market comes out, because it all depends upon what is the prevailing rate in the globe, and then we can take that step to be there in the system now. So we have not yet decided about this OFCB route, but definitely if the opportunities are there and it is in the interest of the organization, we will take a call afterwards.
Got it. I understand. I get that point. So FCNR is the primary focus.
Yes,
on the MCLR side, and I just want to check, Mr. Chandra, how much of the lending book currently is still MCLR? Because we've been seeing a few lenders raise rates, not by a very large amount, but 5 basis points, 10 basis points here and there.
See, we have around 30-35% book is linked with the MCLR. And I think we are still holding our existing rate now. At the end of this month, when the ALCO committee meets, and then we will take a call, because it is purely related with the cost of deposit and other factors to decide the MCLR rate. So we'll wait and see that how the things happens in the system now.
Okay. Just leave us, sir, with a final outlook on the NIMs as well, because you've pointed out that your cost of funds will get a fillip or get a benefit on account of FCNR, and we're likely to have seen the bottom of the rate cutting cycle. So we're only expected to see rates get higher in the current financial year. So what is the outlook for NIMs, sir?
See, this year, the guidance which we have given is between 2.6 to 2.8. That is the guidance which we have given. Now, once this FCNR deposit starts coming in the system, I think definitely the cost of deposit will come down. And if you are able to mobilize the targeted 2.5 billion USD, I think in the long run with this itself, we have calculated that somewhere 7 to 10 basis point improvement should happen in our final NIM.
Understood. And sooner rather than later, because ultimately the mopping up of this will take place in the shorter term, right? In the next couple of months itself.
Yeah, because the route itself is open up to 30th September. So definitely, we need to mobilize this entire fund before 30th September.
So most of that advantage might come through in the second quarter, Mr. Chandra.
Absolutely right.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over a 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, and with me, as always, is Puneet Zaveri, and this is a show that gets all your stock-related queries answered. For viewers who are tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. But before we start doing that, let's take a quick look as to how the markets are doing. Till then, you can send us all your queries. Let's try to pull up the Nifty 50, trading about the 23,300 levels, up by about 0.8%, but off from the day's high point. The interesting factor today will be as to how this ends, because we'll have to see whether it ends on that high note or not. The Bank Nifty also outperforming the Nifty 50, up 1.3%, for Bank Nifty, the gains have been throughout since the start of the trade. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that are contributing to that gain. You have Interglobe Aviation, of course, this is on the back of crude going down. Shriram Finance, Eternal, Bajaj Finance, HDFC Bank doing fairly well. But on the flip side, you have ONGC, of course, down 2%, Bajaj Auto, Tech Mahindra, Nestle, some counters that are under pressure. Let's try to pull up the sectoral heat map and see as to what sectors are doing at this hour. And you have your PSU Bank, which is turned tides today, up 1.8%, being the top sectoral gainer. Nifty Defense also seeing good gains coming in, up 1.5%. In fact, firstly, of course, almost all sectors in the green, with Nifty IT, seeing the least gains. But that's with regards to where the sectors go. Quickly, the mid-cap 150 and the small-cap 250 as well. The mid-cap 150 up 1.2%, the small-cap 250 up 1.5%, both outperforming the benchmarks as we speak. So that's with regards to where the markets go. But, let me also welcome in our guest for the day. We're now joined by Tapan Doshi, who's a research analyst at catapan.in, and we're also joined by Somil Mehta, who's head alternative research at Mirae Asset. Shaikh Khan joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start taking the first question. This is coming from Nithika, who's writing us from Pune. She's asking about Servotech Renewable Power Systems and wants to know if she can go ahead and invest in this one at the current levels. Somil, a very good morning to you. What's your view on this one with regards to where charts go?
Servotech Renewable Power Systems, is that the one you're talking about?
Correct.
Good morning to everyone. Servotech, let me just pull up the charts. Just give me a sec. Okay, so my view is positive. On the weekly charts, we have high top, high bottom formations trading above 40 weekly moving average. That is a good sign. We've seen a small correction on the daily charts, where I think 40 daily moving average will have a good support here at 93 levels. There's one more support around 84 levels, which these are crucial supports in terms of swing lows and averages. Now my view is positive, so my targets on the upside in the very short term would be 115, and the next target would be around 128.
Got it. Thanks so much for that, Somil, and welcome to the show. But the next question coming in now, it's on the AMC space. Gautam, who's a regular viewer, is asking one or two recommendations from this space for the next 12 to 18 months. Tapan, very good morning to you. What would be your recommendation from that space?
Well, good morning, Puneet. Now, if I see the valuation point of view, I think I'll go with Nippon AMC and HDFC AMC. Of course, ICICI Pru is also good, but I think these both are, doing well comparatively, and also quarterly results are coming good, and also the mutual fund SIP is going around well also. So yes, in coming quarters, I think margin will improve. So I think go with either HDFC AMC or Nippon AMC.
Okay, the next one that we have is on Titan. Akash from Bengaluru is holding 20 shares at the levels of 3490. He wants a 2-year outlook on this one and whether he can average at the current levels or wait for it to dip a bit. Tapan, what's the view like?
Well, you can do an SIP manner investment because see the stock is almost 14-15% down from the top, and the July demand is going to come up in the next few quarters, because of the festive season and marriage season and all that. Again, store addition is continuing. Again, their July, again their watches business and all that is doing well. So I am quite positive in Titan, but it will be in SIP manner he can invest.
Well, since Akash had the question, it had to be on Titan. I don't know if either of you have watched the new show to get the reference, but I hope if you haven't, it's a good one to watch. That's a weekend recommendation for you. But the next one coming in is from Ahmedabad. Venkatesh is asking, what's a favorable time to consider Time Technoplast or Cross Limited? Both are smaller names, Saumil, on the charts though. Either of those that you would recommend to buy at this point of time?
The Time Techno definitely a good pick for long term, not in the very short term. In the very short term, probably it will slide till 150, 153 levels. But Time Techno, I definitely like. The breakout on the upside is around 188, 189. A little on the higher side. But yes, for longer term, Time Techno would be my pick.
Right, okay. Time for a rapid fire round. Tapan and Saumil, try to keep your answers as short as possible. The first one is specifically for you, Tapan. Anil Singh wants to know as to what stock in the chemical sector can he go ahead and buy right now to include in his portfolio?
Well, I think Deepak Nitrate, that will be the one.
Okay.
But also on Sagility, Tapan, Debashish Mohanty from Bhubaneswar is holding almost 1,000 shares at 45. Asking if he should, average down right now. Would you recommend that?
No, not now. Hold for one more quarter, then only.
Okay, Cupid is the other one. Sushila from Bellary is bought it at the levels of 136. 1,577 shares is what she's holding. She wants to know the targets on this one. Saumil?
Cupid, definitely positive. My targets would be around 180, 190 levels. But keep a very strict stop loss, very, volatile counter.
K Guru from Chennai wants to know if Honeywell Automation is a good long-term buy. Tapan, for the next 2 years, would you recommend that?
Yeah, he can add it. No problem.
Okay, the next one is on JK Tyre. Kiran from Hyderabad is holding 268 shares at the level of 606 rupees and wants to know if she can continue to hold, add more. Saumil on the charts.
See, in the short term, negative. In the medium term, negative. But in the long term, I think it's at a very good level right now. I don't recommend to average out, but you can hold.
Okay.
Sumit from Delhi wants to know if Lupin is a good pick for fresh entry for the next 1 year. There has been some run-up on this pharma name, Tapan, but would you recommend still buying at this point of time?
Maybe 10% down from me, 5 to 10% down from me, but Lupin is a good stock for long term, no doubt about it.
Okay, the next one that we have is coming in from Suresh, who's writing us from Kerala. He wants to know on KPI Green, from a slightly long-term perspective, what are the technical suggesting? Saumil?
Yeah, I think KPI Green, you can hold on to the stock. In the very short term, it can go down till 350, 355 levels, but hold on.
Okay.
The next one that we had is, on Tata Steel, Shobha from Bangalore bought shares at 202 Saumil. Stocks dipped a little bit from those levels, but does the up move continue to her buying price and then further above?
See, Tata Steel definitely a good buy at this point of time. It has corrected. I'll hold on to the stock. Do not average. It can go down till 190, but hold on.
Okay, the next one that we have is coming in on Sagility. Our viewer has around 10,000 shares, I think, at the levels of 43.5 and wants to know as to what are the targets that one can see from a short-term perspective. Saumil, on the charts.
Sagility, right?
Yeah.
Sagility, definitely hold on for long term. In the short term, yes, it can go down till 36, but yes, hold on.
The next one that's coming in is on KSH International, a recent listing, Tapan. Is it a good bet for the next 12 months is what our viewer is asking.
No, not now. Don't add it. Just wait for 2 more quarter, then only take a call.
Okay, Azad Engineering versus Sansera, which one is a better bet from a 1 year point of view, Tapan?
Azad.
The next one that we have, and this one's from Harsha from Vijayawada on Hero Motocorp. She's holding shares at 5250. Tapan asking if it's a good time to add more at the current levels.
Yeah, he can add.
Okay, the next one is on HFCL. Aarti from Bengaluru wants to know if it is a good buy today at 170. Let's try to pull that up. Again, today back in upper circuit again for HFCL. What's the view like on the chart, Saumil?
Definitely positive. Keep our stop loss at around 160 and hold on.
Got it. But Saumil, are you still positive on HFCL to go up from these current levels? Because the run-up has been quite stark, right?
It's been taking support at around 20 daily moving average and 10 daily moving average every time it comes down. Even yesterday, it has taken support at 20 daily moving average and it has bounced back. So every time it does that, it will continue the trend. The day it breaks that the average, it will go down then. So you keep a strict stop loss.
Got it. A strict stop loss there on HFCL, and we're getting so many queries on this stock as well. The next one's Gaudium IVF, bought at 100 rupees by a viewer Ahmad. He wants to know if he can hold on for the next 1 year. What would you recommend here, Tapan?
Yeah, currently hold it.
Okay, the next one is from Mani, who's writing us and asking about BEL. He's got 500 shares at the levels of 288. Can you hold or sell, Saumil?
Hold, definitely hold. BEL is one of the best on the defense side.
On GHCL also, Saumil, E. Venkatraman is holding shares at 486, stocks down from those levels. Is it a good time to average or just continue to hold his current holdings?
See, I don't, hold on to it. I don't, recommend to average, but hold on to it.
Got it. Well, that was the end of the first round of the Rapid Fire in this edition of Ask Profits. Saumil, we let you go on that note. Thanks so much for joining us and giving us your views. Tapan, stay on. A lot more stock-related queries on the other side after this very short break, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Welcome back. You're watching Ask Profit right here on NDTV Profit, and you can, viewers, of course, you can call us on the numbers that are flashing on the top of your screen for your stock-related queries. Speak to us as well as a guest. That's the landline number that is flashing on the top of your screen. You can, of course, WhatsApp us your stock-related queries as well. But before we start taking the set queries, let's go across to Sharad now, who's bringing us the BSE F&O setup for today. Sharad, over to you.
Well, overall, if you look at it, both BankX and Sensex are doing really well in trade. A good gap up opening, and it's actually sustaining. There hasn't been a major fall coming in. It's actually sustaining. Support coming from most of the stocks. Of course, crude related derivative stocks also are actually doing really well. Good reversals coming in. On the other hand, of course, a little bit of slight sell off in select metals, but overall, all the sectors are in the green. So, of course, that's where the momentum comes. Let's look at the key long build-up stocks, what's happening here in your radar, which are the stocks. To be honest, there's a good short covering at play as well. Our long build-up, we have Motilal Oswal and Interglobe Aviation. Motilal Oswal, of course, on the back of UBS initiating report as well. Of course, what else is holding up in short covering? Let's see. Of course, from long build-up, we also have the short covering candidate. This includes Ashok Leyland, one of the top gainers in the F&O segment, and Inox Wind, also good you could say positional setup coming in for this stock as well. Some reversals also at play. Long unwinding, let's look at the key candidates which are there, which should be in focus, and this includes, of course, ONGC and Oil India, and both of these stocks are reversing because of lower crude prices, and that's what we are seeing. So that's where the sell-off is also happening. But let's see for the sell-off, a short build-up, what's happening in this market. I doubt it'll be that convincing. Yes, it's not that convincing. Bajaj Auto and ICICI Lombard are there, but definitely the market is totally skewed towards the bullish bets right now.
Okay, all right, Sharad, thank you so much for getting us those F&O details. Let's start taking all your stock-related questions. And by the way, on this side of the show, to answer all your technical queries, we are joined by Deven Mehta, who's the Manager Technical and Derivative Analyst at IDBI Capital Markets and Securities, joining us now. Deven, we've got a question on Aegis Logistics. Kumud Sethi is holding 100 shares at the levels of 860. Wants a short to medium term outlook on this one. Already sitting on profits of over 7,000 rupees. What's your recommendation?
I think definitely one should hold this counter. Yesterday we have seen a great move of around 15.5% in this particular counter. Currently it's up by 1%, but I think the way it has moved yesterday, and we can see a golden crossover from lower levels. So I think definitely one should hold this particular counter. This counter can further move towards 1,050 odd levels. So one can try to book profit at that level.
And stocks up 42% this month. And you had 2 days of up move. So you had the first day, I think there was also a Jefferies note where the stock moved on Wednesday. Yesterday as well was up almost 10%. So continues to be a very important stock, at least for investors this week. But the next question from Deepak, who's writing us from Kochi, and a very interesting one on Ramkrishna Forgings. Now his question being that is that stock a good bet for the next 2 years given the current valuations? Of course, last year was that big hit that the company had in terms of inventory mismanagement, and hence FY26 was also a very subdued year for the company. But he's considering already commissioned capex over the last 2 to 3 quarters, as well as the rail wheel factory. So he's done his research. Tapan, would you recommend that the current stock price captures all the negativity? What would your recommendation be for Deepak?
So if you see the profitability and all that, no, the last three years it is not able to perform. No, if you see the P&L and overall, the problem is they are giving the guidance, but they are not following up. And so I really feel that still we have to see whether the profitability is going to come up or not on the hope scenario. And I think in this area, there are many other better stocks available in this area, auto parts. So better I will go with other stock like Jupiter Wagon and all that. There I think one can think about it other than this one.
Okay, so that's the view coming in on RK Forgings. The next one that we have is on Solar Industries. Preeti from Bengaluru wants to know as to what could be the likely upside for the next 2 to 3 months on this one, Deven.
Sure, I think Solar Industry is currently trading at 17,200. We have seen some profit booking from last 3 to 4 days. It is forming some lower top, lower bottom formation from last 3 days. So I think one should, if one is sitting in some profits, one should try to exit at current levels. This can correct towards 16,500 odd level. So one should try to avoid this particular counter buying at this level. And if it's in profit, one should try to book some profits.
Got that view. Solar Industries, again, another good performer this year of 41% as well. But, I think Sharad highlighted about the short covering candidate today, which is Ashok Leyland. And a viewer wants to know, Radhakrishnan, who's also from Kochi, if it's a good bet for the next 1 year. Now, Tapan, we've seen the stock correct from that 200 odd level to the current 140, 145 odd. Would you recommend it's a good time to buy now?
Yes, definitely, Putin. It's almost more than 30% down from the top. And if you see CV cycle is doing well, and in maybe after 1 or 2 quarters, things will be better. So yeah, this is the right time to get in the stock. Valuation looks okay to me.
Okay, all right. The next one that we have is on HPL Engineering. Geeta from Chennai, who's holding 200 shares at levels of 999. She bought it 6 months back. Wants to know if she can accumulate more, and if yes, at what rate. Devin, your view?
One should not try to enter fresh in this particular counter. It is currently trading below its important moving averages, and we have seen continuous low top, lower bottom formation from last many days. And today we have seen a bounce back, but it is unable to sustain. So on the higher side, 780 is the stiff resistance for this counter. So if it surpasses and holds below that, then only we can see some further up move towards 870. But as of now, one should try to avoid. Existing position can be hold with a trailing stop loss of 730. If it breaches 730, one should try to exit from this particular counter.
Got that view, Devin. But the next question coming in now, and it's on Tata Tech. Our viewer, has bought these shares roughly, and this is Kumud Sethi, who bought these shares at 691 roughly 6 months back. Stock hit, I think, 540 and then has rebounded post good Q4 earnings. But what would you recommend here, Tapan? Should he continue to hold, or is it a good time to book his profits?
Now, my take is to book a profit, because this company, as actually, if you see the run up is good, but still I feel about the future, there are a lot of uncertainty here, and even the product development, whatever they are doing R&D, there also I feel that the expense is much more on higher side. So my take is that book profit on a top.
Okay, the next one that we have is coming in on Swiggy. Our viewer, who has not shared his name, by the way, is holding Swiggy since the IPO at 395, and 80 shares is what he or she has in her portfolio. Wants to know if this is a good hold going forward. Tapan, I'll stick with you for this one. From a long-term perspective, considering Zepto IPO also coming in, and that Swiggy is nowhere near to where the operational metrics for both Blinkit and Zepto stand. What is your view?
No, it's a very difficult situation for Swiggy. Again, if you see the P&L is not good. Again, they don't know when they are going to make profitability in Instamart. So, my take is to sell on rice, because still challenging times will be there. Again, the competition is much more on a higher side. So it will be a sell on rice category only.
Got it. Well, the next question is a smaller name. Diffusion Engineers is the other one that we want to talk about. Our viewer wants to take a fresh entry into the stock, and this is Mr. Rao. Tapan, I don't know if you track this counter, but would you recommend entering right now?
See, the stock has already gone up from 240 to 360, and if I see the valuation, it's okay. That valuation is not a problem. Overall profitability is also decent, and the area which they are in, I think that is also good. So just wait for some time, maybe 10% down the line. I think the stocks look okay to me, and the sector is also okay.
Okay, all right. The next one that we have is on Kena Construction. Raja Gopalan is holding 500 shares at the levels of 186, and he wants to know if there is a scope of recovery for his losses. Devin, I'll come to you on this one. What are the charts suggesting?
No, I think the chances of recovery is very less. We have seen a consolidation, but it was unable to surpass the resistance, and it has shown some further weakness from that particular level, that is 135. So I think until and unless it is holding below 135, the structure overall remains weak for this counter, and it can further correct towards 110 odd levels. So I think one should try to exit on small bounces.
Got it. Well, the next question coming in from Sankar from Kochi, and his question being on Piramal Pharma. He's holding 100 shares of the company at 244. I think he was trying to get in touch with us, but Sankar, hopefully this answers your question. What would you recommend here, Tapan? At 244, he's bought shares trading at just around 160, 70 odd. Should he still continue to hold?
Well, my take is, when it goes up, please sell, because it's not able to perform from, I think, few quarters, and also from last 3 years, it's having a negative profitability. Again, the patents and all that, whichever coming, is not so exciting. Of course, they are in a CDMO business, but still, not much more traction is not visible there. So my take is to sell on rise only.
Okay, all right. It's time to, by the way, slip into a very, very short break, but we'll be taking more queries on the other side, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
Welcome back. You're watching Ask Profit right here on NDTV. Profit, the next question coming in now and last 15-minute stretch, viewers, so you can call us as well as send in your queries as well. This one has come in from Tony Pereira. He's keen on buying a couple of stocks. He's mentioned on Interact Building Systems, Clean Science and Jyoti CNC. Now, Tapan, it's a very interesting list. Either of them that you like right now for the long term?
I think if we want to go, I think Jyoti CNC will be a good option. The stock has gone down a lot, and I think from here things will be much better. The management looks promising, and hopefully next 1 or 2 quarters things will be changing. And also, if you see there new plant is coming, and so overall I'm positive on Jyoti CNC out of all this stock.
Okay, all right. The next one that we have is on Imami. Our viewer Tarang from Bengaluru wants to know if he can go ahead and accumulate this counter at the current levels. Not sure if it's from a long-term perspective or short-term perspective, but Tapan, I'll stick with you for this one. What's your view? Because as per Bloomberg's most the highest return potential for any FMCG stock, if it's available, then it's Imami. It's around 45% versus the target price. So what is your view? Is it a good time to accumulate Imami?
So valuation looks okay, quite okay. No, it's almost 21 P, and the stock is not been going up from a long time. But the problem is the sales and profitability also not going from last 3 years. I still not go with this stock. The reason is performance is not there. So I'll go better. We'll go with Tata Consumer or Tata Consumer will be the better option, or Marico. That will be the better option.
Got it. Well, I'm just surprised that apart from Imami, the most valued or return giving is not ITC at this point of time in terms of FMCG, because we've discussed the stock so much that it's still not in that favor list.
Yeah.
Up at 283, of course, today as well, but continues to be one which is a very interesting opportunity nonetheless. The next one that's coming in now, and this question is from Ria from Bengaluru. Her question is on Premier Energies, if she can enter the stock at the current levels, but it's a technical view that she wants. So Devin, for the next 2 to 3 months, would you recommend that?
No, I think one should try to accumulate at lower levels. This can correct, I think, towards 1,000 odd levels. So 1,000 will be the good entry point, and there will be a good risk reward ratio. On the lower side, 950 as a strong support. It is close to 200 exponential moving average. So one should try to accumulate near 1,000 with a stop loss of 950.
Okay, the next one that we have is on Godrej Properties. Vinod from Delhi wants to know about this counter. He's bought at the levels of 2430 and says that he's sitting on a big loss. The stock, of course, is currently trading at 1662. What would you recommend, Tapan?
Yeah, you can go for it. No, valuation looks okay to me. And no, if last few quarters were not so great, but I think coming quarter things will be better. Again, the management is quite confident. Pre-booking is quite good and available at a good valuation. So yeah, you can go for it.
Got that view, Tapan. But the next question coming in now, and this one's not made any money for investors. I'm talking about Glottis. This was an IPO. Came in 2025 and has not given too much returns, in stocks trading at 67. Unfortunately for Savita, she bought these shares at 129, so money is almost half from there. But I know, Devin, there's not too much historical evidence, but on the charts, is there any view that you can offer Savita right now? Should she still continue to hold, exit on any pullback? What would be your view?
No, I think one should hold these counters. Recently, the stock has started moving, and I think one should try to hold this counter with a stop loss of 62. I think that will be a good stop loss for this counter. If it breaches that level, then the overall technical structure will again weaken for this particular counter. So 62 should be the stop loss. This can again move towards 73 odd levels in the coming time. So one should try to hold.
The next one that we have is on Vadi Energy. Siddharth bought it at the levels of 3240. 8 shares is what he bought from a short-term perspective. Wants to know if he can hold, exit, if the stock comes to his buying price. Devin, what would you recommend?
I think he should try to exit if it comes near his buying price, because overall structure remains weak, and now currently it is consolidating in a range. On the lower side, one should hold with a stop loss of 2980. If it breaches these levels, then one should try to exit immediately.
Got it. Well, viewers, it's now time for the second round of the rapid fire in this edition of the show. Deven as well as Tapan, you know the drill. First question coming in now on IGL. Our viewer Siva from Hyderabad bought shares at 155 and has been holding for the last 3 months. Deven, we've seen geopolitical crisis have an impact on the stock, but what's your view on this one now?
I think one should try to book profits.
Okay, the next one is on Jyoti Labs. Praveen from Chennai wants to know if this is the right time to accumulate, considering the stock has corrected so much after the Henical news. Tapan, would you recommend that?
No, not now.
Next one's on a stock that's been on everybody's radar, but nobody owns it. It's MTAR Tech. I mean, some of them do, of course, but Jay Krishnan actually had bought these shares at 7490. Stock seen, of course, a revival today, but Deven on the charts, is this as difficult as one to hold right now? What would you recommend?
I think hold with yesterday's low as a stop loss, 6220.
It's recovered all its losses from yesterday,
yes.
up 12% as we speak. The next one that we have is on Tata Chemicals. Krishna from Bengaluru is holding 94 shares okay, the levels are not mentioned, but 21% loss is what Krishna is sitting at. Deven, what would you recommend?
I think one should try to exit.
Sudarshan from Hyderabad has bought into Nuvoco at the time of the IPO, Tapan, and his buying price is 570. So currently sitting on a loss. Should he still continue to hold this counter or switch to some other cement name?
No, currently hold for 1 or 2 quarter more.
Okay, Lakshmi Dental is the other one. Our viewer has bought it at an average at the current market prices. What Mohan is saying. No, sorry, his buying price is 420. He's saying can he average at the current market price? Any view on this, Tapan?
No, don't average. My recommendation is sell on rise only.
Well, Nagesh from Bengaluru actually bought into ICICI Lombard at the time of the IPO at 661. So he's almost 3x on his money right now. Would you recommend, Tapan, for him to exit or still continue to hold?
First of all, congratulations to him. No, currently he can hold. Stock is good.
Okay, HDFC Bank bought at 800. 100 shares is what Arvind is holding. 2 years perspective. Continue to hold, Tapan?
Hold, but I feel ICICI Bank is a better option.
Correct. The next one that's coming in, it's from Murli from Hyderabad. He's holding shares of SJVN. Bought at 39 rupees 5 years ago and wants to know if he can hold on for another year. Tapan, stocks at 71. What would you recommend?
Currently hold.
The next one is on Zaggle Prepaid. Ravi from Mumbai has bought 200 shares at the levels of 330. It's come down to 200 now. Any scope of recovery, Deven, or should he book his losses?
No, I think one should try to hold for bounce towards 220, exit near 220.
Gautam from Tirupati wants to buy into Shriram Pistons. Tapan, valuations are pricey, but are these good levels to buy?
Yeah, buy on dip, but stock is good. Buy on dips.
Okay, the next one is on V2 Retail. What's the near-term technical outlook on this one, Deven? Gaurav from Bengaluru wants to know.
I think we have seen a bounce back, no any such view technically. It can trade in a range.
Got it. Next one's on Procter & Gamble. Priyanka Asher wants to know if it's a good one to buy at this price. Deven, would you recommend that?
No, I think one should wait for breakouts.
Okay, Central Bank 1000 shares bought at the levels of 31 rupees. Continue to hold, buy further, Deven?
Sorry, which stock?
Central Bank.
Central Bank, I think one should hold this counter.
Next one, Suzlon, bought at 41 rupees and almost 3,200 shares by Sanjay. Tapan, he's of course sitting in profits right now, but asking if the stock can reach 65 in a year. What would be your view?
Yeah, it can.
Netweb Tech is the next one. Arjun Rao wants to know if he can continue to hold this counter. He's not mentioned the price or the quantity, but Deven on the charts.
I think one should hold this counter with a stop loss of 4050.
Dr. Bharat from Andhra Pradesh wants to enter the defense space, Tapan. What would be a couple of picks from there for you?
I think BL, HL and Mezagon.
Okay, Laurus Labs bought at the levels of 1058. Saurav from Jaipur wants to know if he can continue to hold this from a long-term perspective. Tapan?
Yeah, hold it.
Is it the right time to buy quality walls, Tapan, is the question. A very interesting one, but is this good at the current price?
No.
Okay, the next one is on Okay. The next one is from Padma, who's asking about HFCL. We've already covered, I think, the technical view, but any view on the fundamental side, Tapan?
Well, very expensive. Hold with a stop loss if you have.
Okay, all right. That brings us to the end of this rapid fire round as well as Ask Profit. Tapan and Devin, thank you so much for taking out the time and helping us answer all those queries. But viewers, KYC comes up next, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason. Has thought that that is revenue.
But how can a communication error last 2.5 years?
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. In this KYC show, we get you the hottest companies in the small cap, mid cap, and even large caps at times, and why they are rallying, what's the new story looking like, and is there any alpha to be made or not. Let's decide the first company which is coming today, and of course, there are some hints. Try to guess it, and of course, you'll get it, I'm sure. It's the world's largest manufacturer of silica ramming mass. It's a Rajasthan-based company. It has been listed for a decade. Also, one more interesting snippet: the stock is up 11 times in the last 5 years, and also from the March lows, the stock has already more than doubled. I'm sure you must be knowing if you're tracking the small cap space and a little bit of hints about it. But the company in focus in KYC, which has got my interest, is Raghav Productivity Enhancer. This is an interesting company. You can say it's a proxy to the steel industry, but there is a different story to it. But I'll tell you that story in some while. But why are we calling this company? That's the main question. We'll ask the demand trends and the client confidence, why there's so much interest coming in the stock. Second important question we are going to ask, apart from the demand, is the industry is in downturn, then how come the company is doing well? What's the secret about it, and why is the markets rewarding this company? Apart from this, the third question we'll ask is the export outlook, the growth outlook for FY27. Exports have done well. In the fourth quarter, the exports did go up by 15%. So we'll understand more about it. And my curiosity takes me to the most important thing, the raw material cost. Will that be hit in the first quarter, or some inventory adjustments are there? That will be something to look out for. The capex expansion plans, yes, the company is doing that. How much of that capacity is going? It's roughly around 30%, but we'll try to get in more details on the timeline front. The growth targets for the capacity utilization, that's important to understand from the company perspective. And Raghav Kabra, the promoter and the CEO, is going to decode all these questions of ours. But अब समझते हैं राघव प्रोडक्टिविटी एनहांसर्स कंपनी करती क्या है. थोड़ा सा टेक्निकल है. I'll try to make it as simple as possible for you. The company has been incorporated in the year 2009 in Rajasthan. Also, importantly, it's the world's largest manufacturer of silica ramming mass. Now, ये थोड़ा technical लग रहा है. I'll try to explain you as we go ahead where this is used actually. They have a 5.34 lakh million tons per annum capacity. This of course includes the expansion also. Apart from this, also we look at what this company is all about. The silica ramming mass. This is a refractory material basically, and it is used in induction furnaces, kind of a steel and a foundry industry work. So this is important. If you note it down, if you're hearing it for the first time, they have a good export exposure. 38 countries in the worldwide and almost 28 states pan India. Rajasthan में factory है, but presence all over India है. It's prominent in secondary steel plants, foundry and casting units. These are the places where the end user of these products are. So of course थोड़ा सा cyclical business ज़रूर है. The company has 14% market share in this key product, but they're targeting to double that, and that's a big claim. Targeting 30-odd%. So we need to understand how will the company go towards that and by when. Eastern southern markets, they contribute over 50% of the domestic sales, and that's what the company had mentioned in the fourth quarter earnings. Capacity utilization in March was 87%, and generally historically देखा गया है 80% के ऊपर का जो capacity utilization के बाद आप expansion करते हैं. Speaking of expansion, how things are moving out, of course there are two arms for it. This is the overall, you can see the units which are there currently, 4,14,000 million tons per annum. That's expected to go up almost, you could say 30% up, and this would be the final capacity expansion plan coming in for Raghav Productivity Enhancers. Apart from this capacity expansion, let's talk about the exports picture. The exports have resumed normalcy from the month of April, यानी कि फर्स्ट क्वार्टर के नंबर्स में आपको एक्सपोर्ट्स देखने मिलेगा. फोर्थ क्वार्टर की बात करें तो ऑफ कोर्स द एक्सपोर्ट्स वेंट अप 15% एंड द कस्टमर्स हैव बीन अब्सॉर्बिंग द हायर फ्रेट कॉस्ट. सो वी नीड टू अंडरस्टैंड what is the overall, pass through looking like? And this is of course the picture I painted for the exports. Apart from this, the last 10 years history, there's a very interesting data point, and I picked out from the company. This is the volumes, ramming mass segment, and the overall capacity. And over the last 10 years, it was just an SME IPO company, and of course, you could say a very small company. It has grown, migrated, added some new products, tie-ups, JVs, and the CAGRs of the good growth coming in. But what's working for the company? 30% expansion they are doing from the existing facilities. So Street is bullish on that. Street is also bullish on a strong performance company-wise as you compare that with the industry. So this is a bit unique, and that is why it's gaining market share. Healthy return ratios, and they have maintained it, both ROCE and ROE numbers. HNI buying has been coming in this counter recently, so we'll try to understand why the interest has come, especially from March lows. The stock has doubled up. But what may not work for the company, a little bit of concern, is that there is a lack of FI or DI participation for a company whose market cap is more than 5,000 crore rupees, lack of analyst coverage also, and that is why we get these unknown companies to KYC for you to make better investment decisions. And also the industry cycle risk is there in steel, in the foundry segment. So when it reverses, when the valuation reverses, you need to be very important. यानी कि आपको अपना entry और exit point जो है बहुत संभाल के देखना होगा. But let's try to understand the KYC ratings, how we judge a company in this, be it small cap, mid cap, large cap, भेदभाव नहीं होता है. Income statement, balance sheet, cash flow, the usual ones are there. Of course, we are going to get in the ROC numbers to see what has happened over the last 4 to 5 years. The street cred, how much money has been made in medium term, short term, long term. Of course, the shareholding comes in. Valuation, largely we are going to just do the historical work over the last 5 years for this counter, because there isn't no apple to apple comparison for this company. And of course the outlook, what the management is talking in terms of numbers, how the industry is looking like, and we'll get you all these details. But let's start with the first one. That's the income statement, and largely look at the growth coming in the 3-year CAGR numbers, how it's looking like. We have revenue, EBITDA, even PAT, all of them 35% plus CAGR growth coming in. And even in the fourth quarter, they had done really well. Margins profile also has been somewhat solid between that 27 to 30% mark. That means they have actually maintained that. So of course the numbers look really solid, and that is why I have given income statement a strong thumbs up. Balance sheet, interestingly, the company is having a very lower amount, or you could say largely it's a debt-free company. Decent amount of cash balances comes in, but of course इसमें working capital लगता है इस धंधे में, and they have been able to manage it quite decently. So there's nothing very great about it, but they have done well as per the industry standard. So I'm going to give this a neutral rating when it comes to the balance sheet. So we discussed income statement, we discussed balance sheet. Let's try to understand cash flow. Is there any lumpiness here, or is it like a cyclical play? And for businesses like this, it's better to understand the cyclicality of this cash flows coming in. Operating cash flows have done well from FY24 to FY26, kind of moderation coming in, but the conversion is pretty decent right now, and there's nothing much major to analyze here. So let's not waste our time. Let's go and give a neutral rating for the cash flow. This is important if you're looking at the ROC numbers. I know this has completely been above that 20% mark, and the company has been able to manage that. For a company like that, it's an industrial company, and having a 15% plus return ratio is a very good sign, and they have maintained that, and now it has touched the 30% mark. So I'm going to give this a thumbs up as well. Let's talk about the shareholding, and that is where my concern comes in. Promoters and public, it's been even Stevens, you could say, for the last 3 odd years. But the problem is, if the company is doing so well, there is a good momentum in the stock, then why come there is no FI or DI participation? So that's a big question mark for me, and that is why I'm going to ask, of course, our audience also, why this FI DI participation is not there. There might be an overhang in the stock, or is the float issue? That's the question to be asked. So it's a neutral rating when it comes to the shareholding right now. Let's talk about the street cred, and this time this has actually made a lot of retail investors happy. So congratulations if you are holding Raghav Productivity Enhancers, and especially the long-term investors. Last 5 years, the stock has given you 11x returns. That means if you put 1 lakh rupees in the stock, you have sitting on 11 lakhs right now. From March lows also the stock has doubled up, and that's where my interest came in. What's happening in this small cap stock? So it is ticking in all the right features when it comes to the street cred. So we spoke about the 6 ratings, but let's see the valuations. And remember, जब stock ज़्यादा चल जाता है तो valuations बहुत महंगे हो जाते हैं. And yes, the valuations are very expensive if you are understanding and reading and studying the company right now. It's at 102 times for the trailing 12-month P, and at the 5-year peak, it went up to 150 times. So it's certainly not a cheap stock at all. We are at the top of the cycle, or the valuations are high. That's the main question. So it's a strong thumbs down when it comes to the valuations part. Let's talk about the outlook and let's see what's happening here. Of course, the momentum is expected to continue when it comes to the demand from the existing customers, and that is a good sign, especially when the industry downturn is going on, and the company had mentioned that. So company is doing really well. Apart from this, the capacity expansion is at play. I mentioned the amount is 30%. So that's what we'll be looking at, how they go about it. And this is the targeting market share from 30 to 14%, from 14 to 13%. That means more than doubling of market share, and that is a big claim. So outlook is very strong for the company as well. But let's try to understand what's the total KYC ratings for Raghav Productivity Enhancers, and this is the first time I'm getting this company in KYC. And let's understand where does the company stand. If you look at the numbers, the income statement has been done well. Return ratios for a manufacturing company is very, very healthy. Also, the concern for me is in valuations, because the stock has run up so much, and from March itself the stock has doubled up. But the outlook is something where the bullishness is coming from the management as well. So net, let's add up the entire KYC ratings, and the entire KYC ratings comes out to be 5.5 out of 8. It's largely, you could say, in line to positive from the average numbers we generally give a company in our KYC show. But to get in more perspective, we'll be joined in by Raghav Kabra, the promoter and the CEO of Raghav Productivity Enhancers. And interesting tidbits about him: he has over a decade of entrepreneurial experience, and remember, education coming in from ISB Hyderabad as well. And he has worked in Trust Group from Mumbai as well. So there'll be interesting conversations with Raghav Kabra, but just after a break. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
When you say that 15.5 lakh crore is correct and the SEBI has only found 3,000 crore, that's over 90% error right there.
The 15.5 lakh crore revenue which has come in 4 years is perfectly correct. It is not a processing unit, it is a refining and selling unit.
SEBI spoke to Affluence, and Affluence told them that they have not recorded a single trade with you, that Rajesh Exports is not a client of Affluence. So where is that 11,000 crores coming from?
The trade is absolutely correct. We have given all the required clarifications to SEBI in this regard.
You're directly saying that SEBI's finding is wrong. They found that certain numbers of trades have been done from your personal account.
I am not telling SEBI's finding is wrong because there has been no finding as yet.
Mr. Mehta, you've still not answered the question.
SEBI has considered the gross profit as the revenue for whatever reason, has thought that that is revenue.
But how can a communication error last 2.5 years?
Welcome back to Know Your Company, and now we are joined in by Raghav Kabra. He's the promoter and CEO at Raghav Productivity and Answers. Good afternoon, Raghav. It's always a pleasure to have you with us at NDTV Profit. And of course, I was just reading the presentation, last 10 years, how the growth has happened from an SME company to, you could say, a decent mid-cap size company. Just wanted to understand, of course, we'll talk a little bit about the numbers, but I want to understand the demand trends and client confidence right now looking like, because Q4 numbers are pretty strong on the demand front. The commentary was also good. So just Raghav wanted to understand how is things panning out for the company.
Thank you so much, Sharad, for having me over here and to talk about our company, Raghav Productivity and Answers. So see, from a demand perspective, we have seen tremendous demand coming in, which has largely been because of the unique product offering or unique solution offering that our company does. As you can see, we are the largest in our field globally. And if you see the numbers, we have grown from a capacity of 36,000 tons to now almost 5.5 lakh metric ton capacity. And every time that we have added capacity in about a year or so, we have filled that capacity up. This is because of the demand coming in from the induction furnace manufacturers who are making steel and foundry products globally. So from a demand side, yes, we see huge traction in this field. As you know, induction furnaces are the greenest way to make steel, and their share in the steel production in India has risen continuously in the last few decades and is bound to increase because of more focus towards ESG and more focus towards green steel manufacturing. So from that side, we are very, very positive about it. In terms of client confidence, yes, our wallet share in every client or every customer that we supply our material to is generally above 90%. And we've been able to take market share from the unorganized industry towards ourselves being the only organized player in this industry. And that is why these kind of numbers are coming up. And because of which we have the outlook to take our market share from 14% to 30%.
Raghav, that's the second question I wanted to come. So I'll just ask you that there is a good move happening from the unorganized to the organized space. Apart from this, what else triggers are there, which you say that your market share will double up to 30%? And also how different your company is compared to the industry, because the industry is not fully out of the woods yet. It is, some portions are still in downturns. So how are you able to do it so nicely against the industry? I just wanted to understand what's the moat.
So largely, see, we are an extremely R&D focused company. So all the products that our company sells to induction furnace based steel or foundry manufacturers have come out through years of R&D international collaborations with companies like JWKAB Sweden and collaborations with IIT Bombay. What our product essentially does is that it enhances the productivity and profitability of steel and foundry plants. Why it does that is that our product is just a very, very small item in their cost sheet. It is less than 0.5% in terms of their cost. But the effect that it has on the productivity of furnaces is very, very huge. Because if our product runs for a longer period of time, as compared to the alternate that they are using right now, they get almost a 5 to 10x increase in terms of the benefit as compared to the cost of our product. So that is our moat. That is the basic reason of why any steel producer chooses to buy from us as compared to the local alternative which is available to them. So that is the basic reason for why our sales have risen very strongly. In terms of R&D, every 2 years we've been able to, through our R&D team, we've been able to give out a new product to the industry, which is significantly better as compared to the previous product. So even that has helped quite a lot in our ability to gain market share in India as well as the 40 countries that we supply to.
So that's where my next question comes in. Raghav, your ROC numbers have improved, and that's the benefit of the R&D coming in. And it's a very few Indian companies do it as your size, so that's a very good, way to look at things. But I want to understand the export portion. In fourth quarter, there was a 15% year-on-year basis growth in the exports. You're handling around 38 to 40 countries right now. How is the export outlook looking like right now? Because the world is very dynamic.
So, see, definitely the global scenarios right now are very challenging. But what we have seen particularly in this quarter is that our export sales have increased tremendously. The reason for that is we are present in about 40 countries and the number of countries is growing. Our foray has always been that whenever we enter a particular country, we try to target the largest steel plant or the largest foundry plant in that particular country. And after that, once we are able to back them and show them the added benefit of using our product, then the rest of the companies in that particular region or that particular country automatically come to us. In the export side, for example, the Middle East is right now facing a lot of issues and the freights have risen up. And ours being a low-cost item, the freights play a very important role. But even after that, our Middle East clients are buying from us at 3 times the rate at what they were buying previously. Just because that they understand that when they use our product, the benefit to them is much, much more as compared to whatever they're buying locally. And that is why our export outlook remains very, very strong. If you see the last 10 years numbers, our export CAGR over a 10-year period is more than 50%, which is incredible. And we expect this to continue further. And we expect to continue adding more countries as well as more clients across all these countries.
Right. Raghav, what's the pass-through time, because the raw material costs also at times go up and we are seeing that happening across all the industries. Is there any lag? Is there any pass-through? How's things panning out, or does the margin hit comes?
See, generally, raw material pricing right now, particularly after the wars, have risen. So that is true. But mostly for us, it has been a pass-through. Because as I said, see, any customer who's buying our product, they are not buying based on the cost, but they are buying based on the value and benefit that we are able to provide to them. As compared to a local Reving mass supplier versus us, our cost to a steel plant is generally 2 to 3x. Even after such a higher cost, they buy from us because of the benefits. So these raw material costs, which definitely have risen post the war, are a pure pass-through for us.
Okay, so it's a pure pass-through coming in, and that is why I think there is a premium which your company is commanding. But let's understand a little bit of numbers, Raghav. The capex and the expansion, there is a big expansion at play. I just wanted to understand, any kind of capex amount you have earmarked for the next 2 to 3 years, and the capacity expansion, by what timelines we can expect, that's in the commercial.
Yeah, definitely. See, so from FY23 to 26, we have gone from capacity of 180,000 tons to now almost 5.5 lakh tons. And currently we have the demand to fill this capacity up within this year itself. So this capacity will be filled up. The problem that we are facing right now is that this is not enough. And we need to add in more capacity considering the kind of demand that we're getting from within India as well as outside India. So this will get filled up. The current capacity expansion will get filled up very, very quickly. We already have the demand for the same. The idea right now, what we are thinking is that we want to go from a 14 to 16% market share right now to over 30%. For that, we need to almost double the capacity that we are at right now to gain in those kinds of market share. We have the strong demand. We have fantastic products which are very well being received by the industry within India as well as outside. So that is the plan. If you see the ROC numbers, you will understand that to get from this capacity to almost a double capacity, we don't need a lot of capex. It is just about that we go about the capacity expansions in a phased manner, and that is what we plan to do. In the
That's a pretty good perspective. A very short question before we end our interesting conversation. The R&D perspective, since there's a lot of it every 2 years, there's a cycle. Which areas now you're looking at, where there might be an interest. We do not need to know the entire information, but maybe the areas.
That's a fantastic question. As I said earlier, we are an R&D focused company. We are a recognized DSIR, by the Government of India recognized R&D house, and there's a very few companies in India who do this. So we are essentially a silica processing industry. So a silica processing company. Our R&D lies in how we make silica, and we've got several patents for the same as well. Silica is used in multiple different industries, ranging from glass to ceramics to artificial marbles and to semiconductor crucibles. There's two particular areas where we have spent a lot of time and our R&D projects in, particularly the crucibles industry, which are used in semiconductors, as well as the artificial marble industry. Both of these industries' supply chain is essentially